Hello and welcome to Martyn Lucas Investor. My name is Sensei and you are here for the most important FOMC day we've had since probably the COVID era. So let's get ready for today. There is going to be a rate cut. I'm going to tell you now, it's going to be 25 basis points, but that does not matter. What matters is the analysis we're about to provide, what Jerome Powell says. We're going to be covering the whole event live on this show. So thank you all for choosing this show to be watching the FOMC live, because we'll give you the full analysis, we'll give you everything you need to know, we'll tell you exactly what moves we're making. We're not going to give you fake news, we're going to tell you exactly what's going on. So thank you everyone for tuning in. This is the Martyn Lucas channel. My name's Sensei. We normally do a morning forecast show, but today it's a little bit different. We are now in the afternoon, and the reason for this is because that is when we're getting close to Jerome Powell speaking live on the show. He'll be live on this show. We're going to have the decision live on the show. We're going to have the analysis live on the show. We're going to answer all your questions, which no other channel will do. We'll answer your questions one by one to get you prepared for the upcoming FOMC meeting, upcoming FOMC conference. We're going to go straight to our very own newsletter to unpack what's about to come. If you do want to get the newsletter, the first link in the description, but we have a special event today for the newsletter. So we will be having the first ever flash sale of the newsletter for anyone who hasn't got the newsletter yet, to give them an opportunity. A big thank you to all our premium members at the moment for making this possible. But we will have maybe a 1 hour flash sale, first time ever, for the FOMC day, because of how important the information is in today's newsletter. So let's get into it. Let's get into today's newsletter. Let's get into everything going on. We've got Trump meeting Korean leaders. We've got Trump with Xi Jinping tomorrow, but today's focus is all about the FOMC meeting. So as the FOMC cuts rates, I am very, very confident we're going to get rate cuts. Nvidia hits a $5 trillion valuation, the first ever company to hit a $5 trillion valuation. That is incredible. That is fueling this AI hype, this AI bubble. You might want to call it a bubble. You might want to say it's growth and it's not going to fade away. I will go ahead and call it a bubble. Not because I don't think that there's a lot of value in these companies, but because of the market cycle and the market structure. Even though a lot of these companies are bringing in money, bringing in profits, unlike the dot-com era, there is still, I think we're in the euphoric run of the market, where at some point it will pop, we'll go into a bear market, and then there'll be a big deleveraging event before we go into the next bull market, maybe in 2026, 2027. But I think this bear market will come in 2026. But before that comes, if Jerome Powell says all the right things, then we can expect another surge towards the upside. It all depends on what Jerome Powell says. So let's go on to what we can expect, and then we'll go over it again before the actual press conference starts. Can't wait to hear Martyn's morning bell. Yes, we all are looking forward to Martyn being back. He is currently on his holiday, refurbishing his studio, taking some rest for the first time in. Thought something was on fire then. For the first time in, I don't know, 4 years. I mean, he took a little break a couple of years ago, but yeah, I mean, it's the first main break he's taken in 4 years. So we'll have him back by the end of November, 24th of November, I think he's coming back. So yeah, it would be great to have the live opening bells with Martyn. But yeah, I'll be covering the FOMC this quarter, and probably the only time. I don't think Martyn will ever let me cover it again. I think we all prefer Martyn covering it, but we've got I'll try and do the best job. We've got all the analysis. I've spent all morning preparing for this, so we should have a good show ahead of us, and hopefully I'll give you all the information you need to know. So if you have just tuned in, 2 very simple, easy, free things you can do to help out the show. First one is take literally 1 second to go below and hit the like button. I know it's a bit annoying, we ask every time, but it's for free. It takes a second. just press that like button. Also, if you are new here, then welcome to this show. We try and provide you with the most honest, most useful information out there on YouTube. Martyn doesn't consider himself a YouTuber. He's been on TV. He's been a live performer. He just broadcasts on YouTube. So we're trying to build the most honest YouTube channel. If you look around the screen, if you go on any other channel, they will be promoting something of the sorts of trading, leverage trading, trying to get you to lose money. They don't care about you. We care about our audience. So for that reason, we don't take sponsorship deals. Martyn denies $30,000 plus sponsorship deals because he doesn't believe in what they're trying to say. We do everything for our audience. Other channels, they just make videos. They don't care about their audience. They make a video, they don't engage with their audience. We're here. I'll come on to all your questions. I always have all your comments right in my line of sight because the focus is the people watching, and that will be the focus throughout the FOMC. So any questions, especially the members, I would love to answer everyone's questions, but the members are the ones who are actually keeping us live and keeping us going. And as a perk, they get all their questions answered. So it's always the members that we focus on. If we ever have time, we always also cover the subscribers' questions. But in days like this, when the channel's going to get busy, the moderators are going to be hard at work because there's going to be trolls coming in. So thank you to all the moderators. The members are the ones we will focus on, because it's just not possible to answer all subscribers' questions. But I will hopefully be able to, as these come through, I'll be reading them as well. Potato Family says, Sensei, you're doing an amazing job. Enjoy hearing all the crypto and stock news. I'm new doing this. Incredible. We want to support the experts, the new people, the ones that want the real information. Too much fake information goes around, and we want to give you the real information. So let's start cracking on. I won't leave that comment. Yeah, some people prefer me, some people prefer Martyn. It doesn't really matter. That's why we have 3 different people on the show to give you some different thoughts, angles, and analysis. Yolanda's here, Human Beings here, Robbie's here, Bruce is here. Thank you everyone for tuning. How will this impact gold? Well, if we get that rate cut that we expect, it's obviously good for gold. If those rate cuts continue, remember, it's all about what Jerome Powell says, his guidance, what's going to happen next year, what's going to be the guidance he sets, what's the Fed think of it? Is there going to be quantitative easing? If he basically says there's going to be more rate cuts and we are still at the start of this new cutting cycle, then that's great for gold. Why is that good for gold? Well, because right now you can go to a bond. You can see Martyn's got some money in T-bills, actually quite a significant amount of money in T-bills, waiting for a potential correction or an opportunity presenting itself in the market. T-bills, very safe. Again, nothing I say ever on this channel is financial advice. That's not the point of me being here. The point of me being here is trying to navigate the markets together, provide you some good news, good information. Anyway, he's majority in T-bills at the moment, Martyn is. Why? Well, because they're providing him with 4.5%, I think it's 4.5% return. If interest rates come down, those returns will come down as well. Maybe the longer term ones will come down more than the short terms. But anyway, in theory, bond returns, very safe returns on your money, whether that's your savings rate on your bank account, whether that's your bonds, whether that's just on your normal bank account, what interest you're getting, that will come down. So maybe from 4.5%, it will come down to 4%, or it might come down to 3% because of what the Fed will start doing. And if that happens, people go, okay, well, gold might be able to give me a better return, because on average, gold might give you a 4, 5, 6% return. Some years it's much more, like the last couple of years. But if you get very safe returns on your money by just holding a bond, 4%, 5%, then most people will go into bonds. But if they see rates continuing to come down, then they might say, actually, I don't want to be in bonds. Gold can provide me those returns and have other significant benefits. So I'm going to move my money out of bonds and put it into gold. So rate cuts are actually great for gold because it makes their return seem a little bit better. And that's also why the money comes into the stock market, because everyone starts looking at their bond positions and go, okay, well, this is free, easy money, 4.5%, 5%, 4%. Why do I need to invest in the stock market at this point when I'm getting very, very safe money in the bond market by doing that? Then they move. That was just a rude comment coming in. I don't know what that was about. Thank you, David. So yeah, people will go from that very safe investment because they're getting 4%. Now they're getting 3.5%. They go, actually, that return isn't good anymore. I want better returns. They'll flock into gold stocks, and that's why everyone likes rate cuts. But rate cuts doesn't equal the market going up. For example, if you get an emergency rate cut, and we'll come on to what I think will happen today in the market, and we're going to go into Jerome Powell's speech and the events, everything. Um, the market doesn't like emergency rate cuts because it's a rate cut, which is great. So you would say, okay, well, rates are coming down for bonds. Everyone wants some gold and stock market because they provide better rates. Well, no, because an emergency rate cut actually um, uh, signals that the Fed is scared, that the Fed is late, that the Fed is reactive. They don't really want to be saying, actually, we need to cut rates before our next meeting next month. That shows there's a real urgency to cut rates, which is not good for the markets because there must be something fundamentally wrong for them to come out and cut rates on an emergency on a random day, which is not an FOMC day. Luckily for us, we're here today. It's a scheduled FOMC meeting. We are expecting rate cuts. Nvidia's just hit a $5 trillion valuation. We've got major earnings coming up this week. 85% of S&P 500 companies that have reported so far have beat on earnings. So we are going into this with a bullish momentum, but we are sort of also priced for perfection. So there is sort of a double-edged sword here. What we want from Jerome Powell is for him to come out with really, really good dovish comments. If he comes out with hawkish comments, if he talks about inflation, tariffs, then that's when we are at real risk of the next market crash. But that's all going to be in this report that we're going to come on to shortly. Let me just see some more of your comments before we come on to that main analysis we have for you today. Sam Thompson says, advice on cutting losses. Not sure if Enphase will recover. I don't give any financial advice. In terms of something like Enphase, which had its earnings yesterday, we covered it live on the show. It's down again 10% today. It's down 60% over the last couple of years or something like that. You need to look at the fundamentals. Enphase is not a company that is a risk-free company. It's a high-risk company, which is, and we've seen the effects of this. It's a high-risk company that's very prone to geopolitical situations such as tariffs, such as China, such as what Trump says. It's very prone to that. We beat on earnings massively yesterday on Enphase, so in theory that's good. However, their guidance, they don't know how to give guidance because there's so much uncertainty with their specific industry. So their industry is very prone and very sensitive to all of this geopolitical situation. So that makes it a risky stock. What do I do with risky stocks? Well, I make sure it's not a large part of my portfolio. So Enphase, if I was holding as an individual stock, which I am, it's not going to be a massive part of my portfolio. And this applies to anything which is a risky asset. This can apply to other stocks, other cryptos. So if you look at a chart like Enphase, this is a member who's been over for 6 months, so I want to answer this question. If you look at something like Enphase, let me come over here. It's at $31 now, and it's been crushed for a while. My personal strategy would be, well, I'm going to keep hold of it because I believe in solar, I believe in Enphase as a company, but I know it's risky, and if things continue like this, it might actually keep going down. But it's a small part of my portfolio. I'm willing to take on the risk. That's my personal opinion. It might not be right for you. So would I be cutting my losses and just selling and leaving? On some stocks, I'll be like, yes. On SBC at $40 before the split, I said, yes, I'm cutting my losses because I don't see a future. On Enphase, I'm a little bit more bullish on it. I like the fundamentals. I like what the technicals are potentially suggesting. So I keep hold of it because I like the fundamental analysis. So do your research. Do you like the company? Do you think it can recover? If not, then why are you holding on to it? Why did you invest in it in the first place? Secondly, what I would personally do is I would look at the chart and go, okay, yes, I like the fundamentals. Yes, I know it's risky. Maybe it will drop another 50%, 60%. It's not a large part of my portfolio, but I like it. I'm not going to go ahead and DCA every 5% it goes down because that would be silly. Because as we've seen, if you just DCA every 5% it goes down and keep adding to it, well, it's a volatile stock and can drop 20%, then another 20%, then another 20%. And then by the time it's at a level, you run out of money and you're all in and it drops another 50%. So that's not something I would do. I wouldn't just DCA randomly into a stock like this. I would look at specific technical levels for something like end phase. So I'll be looking at it right now. It's at $31. It's at a major level of support. I like it here. I've bought some when we hit it last time. We hit $30 last time. I bought it, went up to $40. I didn't sell it because I'm waiting for bigger returns, maybe up to $58. And now we're back here. So if I wanted to, I'd buy more. But in fact, why would I? I've already bought it at $30 a couple months ago. My next strategy is, and I don't care if it goes down to $17, I will buy more then. I'm not going to buy more at $25, $26. I'll buy more at the next major level of support, which is the support level from 2020, 2019. So at that level, I've predetermined that around these levels, I'm putting in 40% of the amount of money I want to put into end phase at $30, which I already have. And then I've also predetermined by looking at the chart, once it reaches $18, I'm going to put in another 30%. If it goes any lower, then I've got my next level to buy some more. And if it goes lower than that, I'm just not going to be looking at it anymore unless something fundamentally changes. So I'm not cutting my losses. I'm just buying more at a specific level, but I'm not buying every 5% that goes down. Otherwise, I'll run out of money very quickly. It's a small part of the portfolio, not something that I need to cut my losses on. I rarely cut my losses. It's not a terrible strategy. If I see something very fundamentally wrong with a company, there's nothing wrong with cutting your losses, especially with SBC potentially back in 2022, when you can see that the trend was down, they weren't making any money, and Delta wasn't going to come on for a while. That says, okay, there might be a lot more opportunity down the line, and there was. It went down another 90%. I cut my losses. I bought back at $3. So it's all up to you, but that's my personal way of doing it. Thank you, everyone, for tuning in to this event. We are building up to the FOMC decision. Jerome Powell is going to be live on the show. He's going to be giving us the rate decision, and then we're going to go into his speech, which will tell us all, and then we'll have the Q&A, which will tell us even more, and the market is going to be all over the place. Hopefully, in the next half an hour, we're going to get started with our own personal analysis. Then in the next couple hours, we'll be moving over to the main show with Jerome Powell. But stay with us. This is the build-up. This is where I can answer all your questions before we go into the event. If you have just tuned in, please do hit the like button. Please do hit the subscribe button. We are the channel that's going to provide you with the best, most informed, no fake news on this channel. We try and give it to you as it is. We don't try and overhype it. We don't try and underhype it. We give it to you exactly as it is. As you can see around the screen, there's no sponsorship deals from anyone. We turn down deals because we care about our audience. So let me go back to your comments. If you do want to become a member, now is a great time to do it, because when it gets to the FOMC time, the viewers will be much higher, hopefully. And that would mean that I would be focusing on the members when we get to that point. So that's the membership link. Stay tuned, because we do have a flash sale coming up for the newsletter as well. First time we've ever done this. So I might even put a countdown on the clock. What time should we do? I think we do it just before the FOMC decision. I won't put a countdown yet. Anyone know why all crypto dropped simultaneously last night? It seemed very orchestrated to me. I wouldn't say it's orchestrated. I would just say everything follows Bitcoin. So all these algorithmic bots, all these, everything looks at Bitcoin, and everything is measured against Bitcoin. So people are trading specific coins against Bitcoin or with their Bitcoin. So things move systematically in the crypto market together. So if you see Bitcoin drop, the others will drop. But I don't think anything significant happened last night with a drop. I mean, let's go into the 15-minute time frame. Nothing that I specifically noticed. No, nothing significant. It's normally the S&P 500 drops a little bit, Bitcoin drops, and then the altcoins drop as well. Very, very minimalistic things. I think I did show you the chart here. Nothing specific. Let's go through some of these comments. I hit the like button. Yeah, we're going to come. Thank you so much for hitting the like button. We're going to come on to the main analysis very shortly. We do have Bloomberg open over here. Can I put this on? No, I can't. Why does that not work? If I go over here, I think I can change that. Let me go. I just want to show you what. Ooh. I think we are good. Are we all good? Let's refresh. I think we're good. We're back. What's going on? Yeah, we're back. We're back. I apologize. Thank you for sticking with me there. There we go. We're good. What was I going to do? I was going to show you Bloomberg. So let me just make sure we can do that. And then if I go here, does that still work? Okay, yeah, that's Bloomberg. Perfect. Sorry about that. There was just an issue with the streaming software. We're all good now. Can I still do it now? There we go. That's all perfect now. Okay, let's get back into all your comments. Okay, so let me go back into it. What's everyone saying? We're getting ready for the Jerome Powell live. We're going to get into the analysis in literally 10 minutes, so stay with me. I can actually put the countdown on for the analysis. Let me just put this countdown on so everyone knows when we're going to get into the analysis. Are we all good? Let me know in the chat if you can hear me and you can see me. I just want to make sure that little glitch is all okay. I think we're all good. Let me know in the chat if we are all good. Everyone just let me know. I think we're fine. What's going? Just make sure that's down there. Oh, all good, all good. Yeah, we're all good. Thank you so much. Yeah, you can hear and see me. Thank you. Perfect. That's what we want to hear. That's what I want to hear. Perfect. Let me give you comments. A lot of talk about bubble. Don't be scared of that word. Be fearful when people start using the word. This is the new norm. Oh, I like that, Cedar Trees. David Hensley is here. Let's go through some of these comments. Thank you for the detailed response. No worries, Sam Thompson. I'll try and answer all members' questions. What time does the Fed announce the decision? The Fed decision will be in about 2 hours. Powell speaks at 2:30. Yes, he does. But you want to... What's the point of just tuning in for when he speaks? You want to know how to understand what he's saying. I mix the times would like to have a swim. Enjoy your swim, human beings. All good. Yeah, it's working. You're back. You're back. Thank you so much. I think today would be a great for members to give out free memberships. Well, that's up to the members. Free memberships are a true blessing. Yes, they are. But you can always become a member yourself. Then you get all the perks and benefits. We can hear and see you. Thank you. Everyone said it's all good. Okay, I can hear and see you. Your beard looks perfect. Okay. That's nice. Okay, we're back. I'm glad we are back. Let's get into the analysis then. So this is from our very own newsletter. I am going to put a timer on the screen, so bear with me. We are live a little bit early to give you all the information, so we do have time. Oh, Martyn's just said a comment. Martyn's back. Martyn has just commented. Let's read this. I bought back into the S&P 500 VOO 4 days ago with 66% of his funds. He made $2,500, sold it this morning, back in T-bills, 90% T-bills, 10% S&P 500. I believe all is priced in and more. So there we go, from live updates from Martyn on his holiday. He is out of the S&P 500, still has a little bit in case it does want to. Well, we've got 10% in the S&P 500, a little bit of skin in the game there. And then Martyn is saying he believes it's all priced in. So I agree. I think the rate cut decision is priced in. I think Jerome being dovish is priced in. I think the earnings over the next tonight and tomorrow, which we're going to be covering as well, I think a beat is priced in. Does that mean we can't go any higher? In my opinion, no. I think that means we can go on that last euphoric run. If you want to listen to Tom Lee, he might say there's another 7-8% left in it. If you want to listen to some analysts, I think it's JP Morgan, they said we can go to 7,100 in the S&P 500. That's another 5-10%. If you want to look at back at the .com era, if you want to go back to those sorts of valuations, that might be another 5-10%. So it can go higher, but if you're looking at risk to reward and you are an active trader, if you're a long-term investor, it doesn't matter. You just hold it. It goes into a bear market. You buy more, and you're happy. For active traders, they are looking for any reason to sell off. How do we know this? Well, we know this because there was a 100% tariff announcement by Trump, and the markets crashed. They went down 5%, and the crypto markets went down 85%. That wasn't because of the news and how bad that news was. It's because anyone's looking for an excuse to sell. They sell first, ask questions later. So that means with today's announcement, if we get any sort of indication from Jerome Powell that inflation's a risk or tariffs a risk, they will sell and then ask the questions later and then buy back in if needed. We also saw it with the banking crisis. I'm not talking about 2008. I'm talking about a couple of weeks ago when there was one earnings of a fraudulent case for $50 million and another case of similar sort of fraudulent in the regional banks in the US. That is minuscule numbers. However, the whole regional banking market and the stock market sold off. Regional banks were down 5 to 10%, the stock market was down 1 to 2% for nothing, for literally no reason at all. I came on live and I told you this is a nothing burger. This isn't a reason to be selling off, but the market will sell off. Why? Because they're on edge. Everyone's on edge. Any piece of bad news, they want to be out the market, and if it's not as bad as they think, they'll buy back in. So that shows you the market was on edge. And if something bad actually does happen, not 100% tariffs, because that was a threat, it wasn't actually coming effective yet. Everyone knew that Trump was meeting Xi Jinping, so that wasn't actually a bad situation. The regional banks, if you looked at the numbers, which we did live on the show, that's why you should always tune in. We debunked it. It's a nothing burger. If something bad actually happens, like Jerome Powell says the cutting cycle's over, or he's actually hawkish, or earnings really misses tonight and tomorrow, something significant that's bad, backed up by data, that's when you can go into a sudden sell-off. That's the scenario where potentially Martyn is preparing for, because everything's priced in for perfection. And if it continues to be priced in for perfection, we can go up another 5-10%. Crypto can have its altcoin season. We can all be happy and then go into a bear market. But if something actually bad happens, whether it's a carry trade, an earnings, or anything that's not priced for perfection, that's when the sell-off can continue. I think we've got another comment from Martyn down here. I believe that too, but I'm earning 4.2% for now. I'll be back in very likely today during your event. Thank you for keeping us updated. So Martyn is actually going to be, this is comment live on the screen. Martyn's actually going to be watching this event and trading throughout it. This is what many people are going to be doing, traders as well. Whether there's an opportunity presenting itself, that's what Martyn likes to do. He wants to put his money to work. So if there's an opportunity, Martyn will be back in, or at least trading the event as well. So it'll be great to have Martyn throughout the event. I'm sure he'll try and keep us updated, but he'll be watching it as well. I'm going to be super focused on what Jerome Powell actually says. I'm going to be doing live analysis behind the scenes. So you're going to be watching me watch Jerome Powell, but behind the scenes, I'm going to be transcribing what he says, running it through analysis, putting my thoughts and opinions on it, and then giving you the full analysis after. So you're going to get the full shebang today. The pre-analysis, the decision, the Powell speech, my analysis again, Martyn trading throughout it, giving you guys updates. Everything's going to be going on, and then we're going to go straight into the biggest earnings of the year. Martyn says, we've had a great rally already in the last 2 weeks on earnings. Yes, we have. We have had a really good rally. Again, we're really pricing for perfection. When is it? We're looking in a couple hours, Andy. But yeah, we're going to start with our analysis in a second. As well, let me bring on Bloomberg, see what they're talking about while I sort out the analysis we're about to
and
present.
the spending that they're all doing on products or services, and
let me just make sure we've got everything here. Let's see what they're talking about here on Bloomberg. Okay, here we go. Let's go to Bloomberg for a second.
WLT, additional stake in the company, shooting up the rate.
1 second, let me bring Bloomberg. They're talking about today's event. Let me bring it back slightly.
going to get anything actionable from the Fed chair when it comes to understanding how this week's layoffs, and there's some big numbers here. Amazon, 14,000 workers to be shed, UPS 34,000 workers to be shed, will lead to more aggressive cutting of rates in 2026.
Yeah, we'll see. I think, he's in the same boat that we are. We're talking to all of our clients all over the US and around the world, getting a sense of how they see the labor market. I think by and large, they see the labor market softening in through the September period and into October. So I think that's an interesting data point. I'm sure policymakers are doing the same thing, canvassing their contacts. I also think we have enough data to go on. I mean, the jobs data, whether it's from ADP or BLS that we had, shows the same trend, which was a slowdown. We had yet to see really layoff activity. You know, we've been looking at the state level unemployment insurance claims, and we haven't really seen that feed through. So the headlines, are worth paying attention to, and we'll just have to see how that plays out. But given that the Fed's over 4% on the funds rate, I think the safe thing, the easy thing to do is just cut rates today. I mean, we already had one rate cut earlier, Bank of Canada, getting back closer to 2%. They're probably at or below neutral on theirs. So I think the Fed should maybe follow their lead and move in that direction.
All right, WSL space ALTE go on the Bloomberg terminal. That'll get you to private and proprietary alternative U.S. economic indicators. There you go.
Stay with me. Analysis coming up shortly.
It has it. That's how I.
You just got to dig around a little bit.
Exactly right. Jeffrey, let's assume that the Fed does cut today. What do you think would be a reasonable cadence of their future cuts?
From our perspective, we think that inflation is moderating. The tariff inflation that we are seeing is a little bit of noise. And if you try to look out over the next 12 months, we can build a plausible case to get back closer to 2% on core PCE by the end of next year, so the end of 2026. If we're right on that, even if we're in the ballpark, I think rates should be quite a bit lower. I think back to 3%. On the funds rate. So we have a cut today. We have another cut in December, and then we have 3 next year as well. So that's kind of how we're seeing things shake out. The only real interesting question is if we're going to have a much weaker economy signaled by the weakness in payrolls, or if things can pick back up. It's possible things could pick back up in 2026. So that's the interesting question. I'd like to see how Chair Powell answers that question today.
I suspect the answer will include some version of AI because of productivity gains. Yes. I want to get your take on inflation. Why is it that the consensus view is that tariffs cause only a one-time price effect?
I think, we look at it as, tariffs as a tax on imports. So it is going to push up the cost of goods. But when we talk about inflation, we're talking about the general level of prices, so all prices. And if you look beyond goods, and you look at non-housing services, for example, and you look at housing, both of those categories have actually dragged core inflation a bit lower year to date. And those other two categories account for, I would say, roughly 75% of core PCE. So when you're thinking about overall inflation, which is what we're trying to do, yes,
inflation is going to be the big topic today. What does Jerome Powell say about inflation?
By everything else we're seeing, and the softness in housing, so rents and owner's equivalent rent, we expect that to continue in 2026. And if the labor market remains, somewhat weak, then non-housing services should also moderate. So that's how we're thinking about it.
All right, Jeffrey Cleveland, thank you so much. We appreciate that. Jeffrey Cleveland, he's an economist over there, paid in Regal out there in Los Angeles. Once again, leading kind of the winners out there in the world is NVIDIA. Just extraordinary accomplishment today, reaching $5 trillion in market cap.
We're actually got a full story on NVIDIA. So we're going to have the full analysis. We're going to have Jerome Powell speaking. We're going to have the my thoughts on the cut. I know it's going to be a 25 basis point cut. I'm very confident in that, but we're going to have the full analysis starting in 7 minutes. Let's continue to tune into Bloomberg for the next couple of minutes.
There's always news around this story. Michael Shepard joins us, Bloomberg Senior Editor for Technology and Strategic Industries. Michael, first of all, I don't know, I guess it's just a number, but boy, $5 trillion suggests that this market continues to see extraordinary value in this thing we call AI. What do you make of it?
Well, you can see not only in the share price, which is up well above 40% this year, but you really can sense the enthusiasm for artificial intelligence and all the CapEx that has gone into it. We're going to be hearing later today from some of the hyperscalers, Microsoft, Meta, and Amazon reporting results, and they are some of the biggest buyers of NVIDIA's technology. So there is a real symbiosis, and we haven't seen any slowdown from them. We'll get some signaling after the results come out in their various conference calls about what their plans are for investment in this area going forward. But at least based on yesterday's GTC event here in Washington, the big industry confab sponsored by NVIDIA, we're really getting a sense of no sign of an end to the momentum. And Jensen Huang was emphatic in saying that he sees no sign of a bubble coming and that he expects another $500 billion in revenue over the next 5 quarters tied to all of that.
I'm so glad you bring that up because we wanted to play some sound from that conversation Jensen Huang, the CEO of NVIDIA, had with our Ed Ludlow, Bloomberg Tech co-host. Ed spoke with both Jensen Huang and Nokia's CEO, Justin Hotard. Let's take a listen.
I don't believe we're in an AI bubble. And the reason for that is we're going through a natural transition from an old computing model based on general purpose computing to accelerated computing. We also know that AI has now become good enough because of reasoning capability, research capabilities, its ability to think. It's now generating tokens and now generating intelligence that's worth paying for.
Mike, what gets my attention is Jensen Huang coming out and saying definitively that he does not think there's an AI bubble. Do you think any of the CEOs of the 3 companies that are reporting today, the 2 that are reporting tomorrow, are likely to go out on a limb and say that?
You know, they have put so much into artificial intelligence themselves that they would be loath to issue any kind of a bubble warning. That'll come much more from the outsiders. The interesting thing, though, is when NVIDIA talks about AI, it is not thinking just...
Okay, let's give our own thoughts on that NVIDIA story. We are coming closer to the events. You've got the analysis starting in 4 minutes. We've got the flash sale for the newsletter starting in 1 hour and 47 minutes. That's the same time where the Fed event will be starting. So it's all going to start getting very interesting, and we want to start giving that analysis so you can understand what to expect shortly. Martyn is saying crypto is telling a very interesting story. Martyn always has great sources when it comes to the information, and crypto is going down. Crypto is going down. What can we take away from that? Well, people don't really want to be investing in crypto at this point in time. Why? Well, because as I've just mentioned, we're priced for perfection. Everyone wants perfection. Any little bit of bad news, everyone sells and then asks questions later, and then they get back into the market. What is the most risky asset class right now in the markets? It is crypto. I love crypto. I'm all in crypto. I'm 85% in XRP. Have different positions. This cycle, I've maybe only taken 10% profits from everything. So I am very much in. I'm very much holding. I'm very much hopeful. But hope's not always a great thing because it can go all the way down. So what's going on right now in crypto? Crypto's down. Bitcoin's now down 1%. Bitcoin's now down to the lowest levels in the last few days. The altcoin market is getting crushed right now. Well, not massively, but yeah, it's down. Why? Well, because crypto is the most risky asset class right now. People will be selling this, waiting for Jerome Powell to speak. Firstly, waiting to see if there is going to be a 25 basis point rate cut. I'm very confident in that. If there's not, if we get to that timer hitting 0 and there's not a 25 basis point rate cut, well, and it's a hold, then market's going to crash. So it's getting ready for potentially that situation. It's also getting ready for a situation where Jerome Powell comes out and he's actually a bit more hawkish than we expected. Maybe talking about not getting data, maybe not talking about more about inflation becoming an issue, maybe giving a hawk, and we'll look at all that terminology in a second in the newsletter, but maybe comes out hawkish and the markets will crash. So people are just trying to front run it, and it's maybe sensible because any big thing can crash the markets. So what investors are doing, and big investors, because this takes a large amount of money to push Bitcoin down like this, there'll be big investors right now taking money off the top in case it's going to be bad, in case the speech is going to be bad and then the markets are crashing, so they're already out ahead of everyone else. And then their second option is if everything's good, well, they don't mind paying a little bit of a higher price, just knowing that the market's going to go up a little bit more. So they want certainty rather than uncertainty. Right now, there's actually uncertainty in the market because we don't know what Jerome Powell's going to say. We don't know what the earnings are going to be tonight. That's why people are taking the money off the top. Just like we saw a couple of weeks ago with not Silicon Bank Valley. It was I don't remember the specific company, but it was the regional banking crisis that everyone thought was going to happen. There was a $50 million in fraud. It was an absolute nothing burger, but everyone sold it off. The banks were down 5-6%. The London banks were down as well. The global stock market took a hit for $50 million. That's absolutely nothing. Why? Well, because they were worried it's another banking crisis. They sell, ask the questions later, buy back in. The next day, the banks were up 5%. Why? Well, because everyone bought back in. Same with the tariff news. Everyone sold as soon as they heard it. And then everything rallied 50-60% in the crypto market after that big liquidation week. So people sell, wait for certainty, buy back in. That's what's happening with crypto, in my opinion, right now. If we go over to the stock market, I wouldn't be surprised to see something similar going on. Let's have a look at the S&P 500. S&P 500, yeah, sideways. It's up still today. It's actually close to the lows of its day right now. Sometimes we rally into it. I think we'll sell off into the event, and then if nothing amazing happens, I think it'll be a sell the news event. But we're coming over to our analysis now, so we'll talk all about that right now. Top man, got my powder ready for a dip. Yep, always have something ready for the dip. So let's get rid of these. Oh, I don't know what I did there. Yeah, okay. Nothing weak about selling and taking profit. Absolutely not. There's nothing wrong about selling. I mean, this is what big hedge funds are doing. This is what the big money is doing. They're selling to potentially buy back, even at a higher price. I mean, that's what we saw with regional banks. That's what we saw with tariffs as well. Let me just put the Fed event. Fed event is starting also at the same time, so I'll put the same countdown there as well. This is our build up to the event. Okay, so you expect Powell to give a happy talk speech. We're going on to analysis right now. Good, sell or buy. I don't give financial advice. Only the weak sell. Nothing wrong with selling, as Martyn says. As a long-term investor in crypto, I'm loving these pullbacks, accumulating. I love it, Christopher. That's the right mindset, in my opinion. Again, I just want to make clear to everyone watching, this is not financial advice. Nothing I ever say is financial advice. Please do not buy or sell based on anything I say. I'm not here to tell you to buy. I'm not here to tell you to sell. I'm here to try and guide you through all that is going on in the markets. Have markets already factored in rate cuts, and how do you think the markets will react to this in the short term? So we do have a poll running right now. What will the rate decision be? I'm sure most of you said 25% rate cuts. Yeah, some of you said hold. If it is going to be a hold, the markets will crash, in my opinion. If it's going to be 25 basis point rate cut, the markets won't do anything because that's what's expected. Maybe a sell the news. Again, remember, we get the rate decision. Half an hour later, we get the meeting. So half an hour before, we will know if it's a hold, 25 basis cut, 50 basis cut, or a hike. I think it's a 25 basis point cut. Again, that's what's expected. So the markets won't really react to that initial bit of news. If anything, they might sell off a little bit. Anyway, 50 basis point cut, the market will rally. The market will really, really rally if we get 50 basis point. 25 basis point is what's expected. 25 basis point is what I'm calling for. Very confident in that. I might be wrong. If it's either of the other one, if it's a hold, we're going to crash. If it's a 50 basis point cut, we're going to rally, because that's not what's expected. The market has priced in a 25 basis point cut. If it's a hike, then goodbye. All leverage in the market. We will have a 30% crash maybe tonight. So let's not hope it's not a hike. I don't think there's any chance of that. Okay, so let me go into the analysis because we're getting closer and closer by the minute. So let's give you that analysis. Remember, this is in our very own newsletter. You're going to get first time ever we're doing any sort of promotion on the newsletter in about an hour and 39 minutes. It's going to be a big flash sale. First time ever. So just keep an eye out for that. This is taken from our very own newsletter. Every single day you get this newsletter in your inbox. Thank you to all the premium members that has made this possible. Have I missed anything? No, I haven't missed anything. Okay, so let's get into it. This is a deep dive section of the newsletter. The Federal Open Market Committee, the FOMC decision today at 2 p.m. Eastern Time. We're covering it live on the show. is an event where the market reaction will hinge entirely on language. The 25 basis point cut is a foregone conclusion. It's my opinion. I could be very wrong about that, but I am very confident, and I don't think I've ever been wrong about an FOMC decision. So I'm going in with a 25 basis point rate cut. If it's more, if it's 50 basis point, I'd love it. The markets rally. If it's no rate cut, well, the markets will crash. If it's a hike, well, the markets will go into it'll be turmoil. So we're expecting to go from 4%. Remember, the Federal Reserve is a bit funny. They give two certain indicators. They go, what do they say? They say it's between, they give their current rate between two. So it's 400 basis points to 425 basis points. So that's 4% to 4.25%. That's the current rate right now. We're expecting that to go down 25 basis points to the rates of 3.75% to 4%. Investors must look beyond the action to the words spoken by Chairman Powell at 2:30 p.m. Eastern Time press conference. So, real investors, not fake investors that will join just for that single minute where it says 25 basis points or 50 basis point. Real investors, the people that are watching this show right now, you are the real investors. Why? Because you're here ready for the analysis. Don't just look at what it's going to be. We're very confident it's 25 basis points. It's not as simple as what just looking at the rate cut decision and then therefore you know everything. You know exactly how to position your portfolio. It's not that simple. Investors need to look beyond that piece of data and actually analyze what Jerome Powell says. It's the most subtle things he says that are the most important thing, not the thing that's going to be plastered everywhere. 25 basis point rate cut, Jerome Powell, there's a 25 basis point rate cut. Those are the things that are going to be the headlines everywhere. Don't worry about the headlines. Worry about the little details and the words that Jerome Powell will say, which we'll analyze live on the show. We'll have that Q&A session here. That's what's going to be important, and that's coming up in this show. So let's get ready to understand. So let's just throw that off the book. Let's just agree that it's a 25 basis point rate cut. You can disagree with me, that's fine, but that's not going to be the focus of this analysis. We could talk hours about that, but that's not what's important. 25 basis point rate cut, that's priced in. All you need to know about that is if it's going to be less than that, the markets will go down. If it's going to be 50 basis point, the markets will rally, but the chance of it being more or less are very low. So let's move past that whole argument of what the rate cut's going to be. Now that we said that, we'll keep the poll running and then we'll change it. I'll let everyone decide. Will a pause be bad for crypto? A pause will be bad for everything in the risk-on markets. So, expectations and wildcards. The liquidity disconnect. The initial market reaction will be sell the news event if the Fed simply delivers an expected cut and nothing more. If, let's just imagine a scenario. We just get the 25 basis point rate cut. Jerome Powell says, here's a 25 basis point rate cut, and then walks away from the stage. The market will crash, not because it's unorthodox, but because just knowing it's a 25 basis point rate cut is a nothing burger. It's actually not what the market's pricing. The market's pricing is something a little bit better than just getting a 25 basis point cut. So in a world where we just get that rate decision and nothing else, the market will sell off just because it's a sell the news event. We got exactly what we were expecting. When a cut is certain, and we're pretty certain about 25 basis points, the futures market have already adjusted, meaning bond yields have fallen and stock multiples have expanded based on that assumption. The focus must be on the unpriced variables which dictate the 2026 trajectory. The market looks forward. The market doesn't care about today. The market wants to see what happens in the future. So, what don't we know about yet? Well, we know a 25 basis point cut. We know Jerome Powell's going to come out, but it's all those little things that no one knows what he's going to say. there's little parts in his speech every single time, like back in the Jackson Hole event, which we covered his speech there, he started talking about the labor market. That's what's caused this next big rally up. Those little words about the jobs market is what we need to focus on now. That basically suggested the next rate cuts are coming and we're going to a rate cut cycle. That's pushed the market up 10, 15, 20% since we had that Jackson Hole event just a couple months ago. So it's very subtle things that no one can predict that moves the market. It might be a good thing, it might be a bad thing. And again, markets look forward. So what we're looking for today from Jerome Powell is forward guidance. Just like earnings and companies give forward guidance. Let's give an example. Yesterday, what happened? Well, again, look at the S&P 500. It's actually selling off now. As I said, it'll probably sell off into this. People will want to take the risk off the table and they're happy to buy back in a little bit higher if it's actually a really good event. So let's take an example of that. If you look at Enphase yesterday, I know it's an earnings, but it's the same sort of principle, forward guidance, all of that sort of stuff. It's down 14% today. It beat on earnings. But what pushed the market down? So you can have that 25 basis point cut, but Jerome Powell can come out and say something that pushes the market down, just exactly like we saw with Enphase yesterday. Amazing beat on earnings, the best we've seen so far in the earnings season. 37% beat. It was a surprise. No one even priced it in. That's like saying we're going to get a 50 basis point cut today, and then Jerome Powell comes out and says something bearish because of forward guidance. No one cares about today, and no one cares about what happens today. It's about what Jerome Powell says and the forward guidance. The market is forward looking. So we want to see what Jerome Powell says about further rate cuts, about what he says about the state of the economy, about what he expects for 2026. Any further guidance, that's what we're going to be listening out for. The market has firmly priced in approximately 3 total cuts, 75 basis points for 2025. So we've got one a few months ago, last FOMC. We're going to get one today, and the markets are expecting to get one in December. So 3 cuts. Next, we're expecting another cut as well. However, the critical disagreement is over the path for 2026. We expect a cut today. We expect a cut for December. That's priced in. Where it all goes wrong is 2026. Nobody, and I've looked at analysts, and I can't predict what happens in 2026 either. There's people that do this for a living. Every single one, they're just disagreeing with each other. You go on Bloomberg and you watch what they say, and that's why I don't like tuning into Bloomberg too much, because they just have different guests. Everyone has a different opinion. You just need to go with what's right with you. You need to buy when it's undervalued. You need to take profits if you want when it's overvalued. You need to look at good companies and invest with your own strategy. That's why Bloomberg doesn't really matter. But on events like this, what's important to take away from those Bloombergs that you watch or whatever is the disagreement about 2026. Everyone is disagreeing about 2026. They don't know how many rate cuts there's going to be. They don't know what the what the base rate should be for the Federal Reserve. They don't know who's coming in 2026, who's going to replace Jerome Powell, and what's their stance going to be. Is their stance going to be exactly the same as Jerome Powell, or are they going to cut more? They don't know what's going to happen with inflation. So 2026 is where disagreement is everywhere. And if you start looking forward to 2026, and this is why I'm sort of leading towards a crash in 2026, is because there's going to be so much uncertainty in 2026 in terms of rate cuts. We can predict the next 3 or 4 months. We know there's going to be a rate cut in December. We know there's probably not going to be one in February. But we don't know what the market's going to look like in 2026. We don't know if we're going to have a soft landing. We don't know if inflation is going to come back. And everyone's disagreeing about the base rate in 2026. So you can look at that. Even the Fed themselves, which are supposed to all... They're supposed to have slightly different opinions, but they're all supposed to correlate and agree on something. The dot plot itself is all over the place. So the September Fed dot plot, the SEP median forecast implied minimal cuts for 2025, suggesting the Fed expects economic stabilization. In stark contrast, markets are pricing up to 100 basis point total cuts through 2026, anticipating that economic weakness will forecast rates down to 2.75 to 3%. There's people, economists, analysts saying that the base rate should be 3.75%. That's only one more rate cut after today. The Fed, some people are saying 3.5%, some people are saying 3%, some people are saying less than 3%. It's all over the place. The most, and that's what we're waiting for. Why am I saying all of this? Well, we need guidance. who's going to give us guidance? Well, it's going to be the head of the Federal Reserve, Jerome Powell. So that's what the market's going to be listening in for. What is Jerome Powell going to give us guidance-wise for 2026? Is he going to it's his guidance. He's the one that sets the rates, really. He's the one that heads it up. He's the one that has the best insights. This is his again, you can say he's political, he doesn't want to cut rates, he's against Trump, whatever. But so far we've seen him act on data. So he's going to give us some guidance, and that's what's going to move the market. So the most volatile unpriced factor is the timing of quantitative tightening. This is the next real big thing we're going to listen to. Massive. This is going to move the markets or not. It's not all about rate cuts as well. It's not all about inflation. There's this one thing called QT, QE, and the Fed has been tightening. So we've been in a QT cycle for a while. So the most volatile unpriced factor is the timing of the end of QT. If Jerome Powell comes out today and says we are done with QT, that's bullish. Simple as that. QT ending is bullish. QE starting is bullish. QE ending is bearish, but QE ended in 2021, 2022, and that's when the market went into a bear market. So if we get QT ending as well, that's a further catalyst to bring the markets up. So Powell has previously hinted that QT would end in coming months. Powell's previous hint that QT can end in coming months is massive, unpriced liquidity shock. The Fed is currently draining $5 billion per month in treasuries and $35 billion in mortgage-backed securities, a headwind to liquidity. Fed Governor Waller, we've been listening a lot to him on the show. If you have just tuned in, thank you so much for tuning into our show. Stay with us throughout the whole event. We're going to be giving you the analysis before, the analysis during, and after. We'll bring you the event to you. We'll bring you the interest rate decision. We'll bring you the just seeing if there's any breaking news. No breaking news. I've got everything open right now. We're going to have the press conference. I'm going to be picking out all the best parts from that speech as well to tell you exactly what all of that means, and then we're going to analyze it and then go over to our next earnings. So stay with us throughout all of this, and thank you for tuning in. If you could just take 1 second to hit the like button, that would be amazing. If you can subscribe and hit that bell icon, please do that as well. That's great as well. I wonder if we can hit a target today. We're on 100. I think we can get 106,000 subscribers today. Let's see if we can smash through that and maybe get to 107. Let's try and get 106,000 first. If you haven't done that yet, subscribed yet, let's see if we can hit our first target of the day. So yeah, QT is a big. There's going to be questions about that. Jerome Powell's probably going to mention it in his speech. If you haven't heard of it, QT, quantitative tightening, sort of restricting the market. So if that ends, that means there's more money in the market, basically, which is good for the markets. And we could hear Jerome Powell say that they're going to end QT, which will be great. The Fed is currently draining $5 billion per month in treasuries and $35 billion in mortgage-backed securities, a headwind to liquidity. Fed Governor Waller recently suggested reserves are near ample levels, the threshold for ending QT. He suggested, we watched him last week, that QT should be ending. Again, Fed Governor Waller is one of the 5 picks that Trump has for the next head of the Federal Reserve. Clarification on this timing will provide structural tailwind equivalent to an extra 25 basis points of easing. That's from a London Louvre's business. Basically, they're saying if you get QT, that's like getting a 50 base. If we get confirmation from Jerome Powell today that QE is ending, that's like Jerome Powell cutting rates by 50 basis points. It's a big boost. That's a really good catalyst. Unpriced surprise factors include a probable dissent from Governor Martyn favoring a 50 basis point cut and explicit concerns about tariff-induced inflation overriding labor market weakness. That could be sort of things that we're not expecting but can come up if they talk about tariff-induced inflation not just being a one-time thing, which they've hinted at before. It's just a one-time thing they don't want to take into account. If they start saying otherwise, that could be something that's unpriced, or if they have internal data about the labor market weakness and it's not just, okay, we're slightly worried about it. If they start saying that we're very worried about it, that can hint towards a recession. So we don't want to hear that. Powell's language blueprint, the dovish versus hawkish tale. So this is how we can tell this is what the market's going to be looking at. These are telltale signs about what the speech is going to be. So how the market's going to take the speech. I think we've got breaking news in a second from Bloomberg. So let me just go over to Bloomberg for their news roundup.
With Joe Matthew.
Let's just listen to this for a second. This is the top stories coming up on Bloomberg. Then we'll come back to our full analysis. Let me just...
Back on the president. Welcome to the Wednesday edition as we count down to the decision on interest rates just a couple of hours from right now on this day 29 of the government shutdown. If you're still keeping track, we're going to talk it out shortly with Bloomberg.
Yeah, we're going to be covering this all live on the show, so stay with us.
Just about to head over to the Fed. And we'll spend some time with Republican Congressman Chuck Fleischman of Tennessee this hour. He'll be with us shortly in studio as we try to figure a way out of the shutdown here. President Trump's in South Korea talking trade ahead of his meeting tomorrow.
Yeah, we're going to cover all of this. We've got it in the newsletter. We've got Nvidia at 5 trillion. We've got Trump in Korea. We've got Trump meeting Xi Jinping. We're waiting for some of the headlines we haven't possibly heard. Let me just see if there's anything more.
There now with Charlie Pellet. He's got the latest on the markets from world headquarters in New York. Charlie, how's it going?
Thank you very much, Joe Matthew. Indeed, welcome back. Nice to have you back again. We have got the Dow, the S&P, NASDAQ. They're all pushing higher right now. Fed Wednesday, lots of moving parts.
We'll have to mute that just because of the music. You can see the NASDAQ is up, Dow Jones is up, the S&P 500 is up 0.14%. We're going into this fairly bullish. The Russell's up as well. Russell will be very sensitive to these rate cuts and what Jerome Powell's guidance will be. Remember, the Russell is basically like the altcoin market of the stock market. So that's going to be very sensitive to rate decisions and guidance from Jerome Powell. So we'll keep an eye on the Russell.
The Mag 7 index up 0.5%, while the 10-year currently yielding 3.99%, the 2-year 3.49%. Gold back in the green, up by 1%.
Yeah, let's just pause that. So we have looked at gold, having a little bounce back. We're waiting to find a level, a solid base for gold and silver. Still bullish on it through 2025, 2026. I'm just waiting to find a base, accumulation, and do the same thing again with the next leg up. I do potentially see a $5,000 to $10,000 per ounce of gold next year. I know that's quite a big prediction. That's a sort of a double in gold, largest asset in the world by market cap. But I think that is possible, and we can see potentially a $100 ounce of silver by early next year, and that could double up as well. So yeah, still bullish on gold and silver. Let's see if there's any other news.
And very well priced, but it's really about if they do something with the balance sheet runoff, and if that gets announced today.
BlackRock Scargi Chowdhury, and you can hear more of the conversation on the Surveillance podcast. You can download.
Yeah, nothing breaking. They did say there's going to be some news coming out, but nothing major breaking right now. Everything is waiting for the big news of today. Is of course going to be that Federal Reserve decision and then that press conference from Jerome Powell. So we'll keep an eye on it. If there is any other breaking news, we'll bring it to you as soon as possible. We've got a few sources open, but it doesn't seem like anything. Nvidia, again, $5 trillion, past $200, hit Martyn's target of $200, hit my target of $195, and it's going beyond. This is the reason the markets are at all-time highs. It's because of Nvidia, it's because of AI. And we'll have that conversation later. Is it an AI boom? Or is this just a bubble that's about to pop?
To only leave for 2 days. Thank you so much, Charlie. It's great to see you in New York. We'll be back with Charlie in about 15 minutes for more on the Wednesday trade. Yeah, you're halfway through the week and not a lot has changed. The government's still closed. The Fed's still expected to cut. All that will unfold today in real time, and we'll do this together. Of course, 2 o'clock is the magic hour here. Our special coverage starts at 1:30 p.m. Eastern time. We're going to talk momentarily with Michael McKee, who's got his bag ready. He's headed over the Fed, and yes, we'll try to get a sense of what he's asking today and whether Jay Powell can answer anything, because we're in this data drought that's been making things pretty interesting around here. 29th of October. By God, it's almost November. You know, we have to turn the clocks back this week, and the government will still be shut down. We'll talk later on this hour with Chuck Fleischman, the Republican from Tennessee, is here. We'll play it to our panel as well. Jeannie Shanzano is with us, Ashley Davis, as we get our arms around everything that's happening today in the nation's capital and, of course, in South Korea. If you want to sound smart at the cocktail parties later.
Yeah, no, okay. It's just Bloomberg blabbering on about nothing. They made it seem like there was some breaking news, but there wasn't. If you have just tuned in, please do hit that like button, subscribe if you haven't done so already. We are bringing you the full coverage, full analysis beforehand. Then we're going to have coverage of Jerome Powell's rate decision, the actual FOMC meeting, the Q&A, the after analysis, and then the two big earnings of tonight. So stay with us throughout this all. This is really going to be the test if this bull market is going to continue or not. It all lies in the hands of Jerome Powell. I think we've got Trump on here, so let me just go back.
Is better off. It will. On this trip alone, I've signed groundbreaking agreements with Malaysia, Cambodia, Japan. Our deal with the Republic of Korea will be finalized very soon, like moments or very shortly thereafter. These agreements will be incredible victories for all of us because everyone is better off when we have stable partnerships, not plagued by chronic problems and imbalances. Probably you know that President Xi of China is coming tomorrow here, and we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both.
And maybe that's why the market is in such a good mood this week. We just keep pushing higher on the idea that not only will we normalize relations or have some kind of a framework agreement with China, but they're talking Blackwells now. You saw this headline? Look at NVIDIA today. Top in 205, was above $208 a little while ago after notching this all-time high yesterday. Blackwells in China? We'll find out about this presumably in the next couple of days, but let's find out what we know right now. Tyler Kendall is on the other side of the world and joins us. She is traveling with the president right now.
This is all about NVIDIA hitting that $5 trillion valuation. This is a big story.
Tyler,
that's why the market is up. We'll come back to our analysis after.
What has Donald Trump accomplished already?
Yeah, hey Joe, and Charlie said welcome back, so I say welcome back as well. There's a lot on the agenda ahead of tomorrow. Now, of course, we know that the top line that we're widely expecting is that there's going to be an extension to the trade truce that's currently in place, and we're going to see a pullback from some of the escalating tensions of the past few weeks. That includes China, which according to sources telling us here at Bloomberg, importing their first shipments of U.S. soybeans so far this harvest season, though relatively it appears to be a small amount. We'll see if we get any other information on just how much of these U.S. soybean supplies they are going to end up taking in. Also, we heard from the Treasury Secretary earlier this week that China is now backing off and delaying its intended export curbs when it comes to critical and rare earth minerals. These sorts of headlines have really been dominating the conversation for the weeks leading up to this meeting. The U.S. itself taking off the table some of its own proposed restrictions, but not yet implemented. But then, Joe, we've sort of gotten this development in really the last few days that it does seem like we could potentially get some other tangible deliverables out of this. We're going to have to see how it shakes out. You, of course, mentioned this news. President Trump apparently going to bring up NVIDIA's Blackwell chips with the Chinese president, Xi Jinping. Of course, this would be very good for the company, which has been trying to regain Chinese market access since 2020. Joe, it gives actually China a lower tariff on the table, not just an extension to the current truce. We'll have to see what that would end up looking like. Currently, 20% of the tariff that is in place on China is tied to fentanyl, so maybe there could be some movement even there, too.
Wow, Tyler, thank you. Is Tyler Kendall the only person awake in South Korea? Right now, it's 1 o'clock in the morning. It's 1:15 a.m. Tyler's got to get some rest. By the way, 10 p.m. Eastern time.
Okay, I think that's enough of that. Again, not really too much analysis. We'll come on to the NVIDIA story. Might as well just cover it right now before we come back to the full analysis before Jerome Powell. Let me tell you a bit more about that NVIDIA story. So NVIDIA nears a historic $5 trillion valuation. It's hit it. It's done it with multi-domain infrastructure push. So NVIDIA just dropped a flurry of game-changing announcements. Here's what you need to know. This is why the market's actually up today. It's not because of the Fed decision, because we all know it's a 25 basis point decision. We're just waiting for that confirmation and then the press conference. If anything, the market should be down slightly today, just like the crypto market is down slightly today, because the market wants to be very confident in the big sort of whales want to be confident in their investments, so they sell off before the announcement. If there's nothing bad that goes on, they buy back in. So the market should be down, but the only reason it's up is because of what NVIDIA is doing and this AI super boom we've got going on. So NVIDIA yesterday, with its big announcements, it has 7 new AI supercomputers for US national labs powered by Blackwell's GPUs. We've got a $1 billion Nokia investment to build AI native 5G and 6G telecom infrastructure. Has anyone heard of 6G? Yeah, I haven't. And here we go. 6G telecom infrastructure. We've got launch of NVQ Link, bridging GPUs with quantum processors. We've got massive AI factories from XAI, Lambda, Uber, and Eli Lilly, and Bluefield 4 release, enabling 800 gigabits per second throughput for next-gen data centers. So, look at all of that. That's why the market's up. Crypto market, I think, is selling off slightly. Gold is selling off slightly. The US market is sort of still up. If you look at the S&P 500, it's up the least out of the major indexes. The NASDAQ's up 0.2%. You've got the Mag 7 up more, Nvidia up more. So, yeah, this is why the markets are up right now. So it's all about Jensen Huang. So Nvidia closed Tuesday up nearly 5% at $201, pushing the market cap near 4.89 trillion, just shy of the 5 trillion threshold. It's hit it. The surge followed a flurry of announcements at GTC Washington, D.C., including a 500 billion AI order pipeline and deepening partnerships across US government, enterprise, and telecom. Remember, we're going to be covering the Nvidia earnings in about a month from now. I think Martyn will be back for that. But they've just had this surprise announcement that's caught everyone off guard, the market off guard, Nvidia investors off guard, and it's pushed it to 5 trillion. I'll explain a bit more about that. I've just got a comment coming in from Martyn, so let's read this. What a day. I'm so excited. I'm very confident in US businesses. The only issue is the price, everyone piling in. It's lining up for those who can drop it, and they will. Yeah. I mean, the market I was expecting to be a little bit down today, but because of this, Nvidia is up. So what the market normally would do in this situation, and it makes it a bit concerning, is they'll sell to buy back. They'll sell the uncertainty and then buy back once they've got the certainty. That still can happen, but it essentially means, and then, I mean, the main point about this all is if something is out of whack, something is out of tune, something is not what we're expecting, the market is ready for a landslide. Not to the upside, but to the downside, a real correction. So remember, price is what you pay, value is what you get. There you go. That's from Martyn. Martyn has updated us today. He is currently 10% in the S&P 500, back to Treasury bills, made a nice profit over the last few days, back on the sideline, waiting for a bit more certainty, waiting for a correction, waiting for some more information, waiting for some value to in front of him so he can buy, and he'll be trading this event throughout. He'll be trading this throughout this event. So yeah, stay tuned with us. We'll bring you all the coverage. The army is strong, but also the manipulation, says someone else. Cedar Trees says when the S&P gains 15% or more by the end of October, November, December, returns have been positive 85% of the time. Average gain 4.8%. Average max drawdown only 3 to 4%. Thank you, Cedar Trees. So yeah, let me go back to our Nvidia story, and then we'll come back to our full analysis. So if anyone's wondering why the markets are up, it's because of this Nvidia, $5 trillion. So big event yesterday. They announced all those big things. What else have they announced? So CEO Jensen Huang unveiled 7 new supercomputer systems, including Solstice and Equinox, set for deployment at Argonne and Los Alamos national labs, and powered by tens of thousands of Blackwell GPUs. A separate tie-up with Nokia, backed with $1 billion equity investment, targets the AI native 5G advanced and 6G era, with T-Mobile beginning trials in 2026. On the infrastructure front, Nvidia introduced NVQ Link, a new open system connecting GPUs to quantum processors and supported by 17 hardware vendors and 9 national labs. Commercially, XAI's Colossus 2 in Memphis will deploy over 500,000 GPUs, while Lambda is building a 100+ megawatt AI facility in Kansas City. The company has launched Bluefield 4. I mean, look at all these names. I mean, it's just you can't keep up with all of these new technologies. A next-gen data processing unit capable of 800 gigabytes per second throughput, designed to power massive AI factories from 2026 onwards. Additionally, Eli Lilly announced the largest pharmaceutical AI factory ever built, and Uber is now partnering with Nvidia on autonomous fleet infrastructure. I mean, Nvidia is just taking over partnering with any company that you can think of. The announcements are massive. The announcements are pushing it to that a $5 trillion valuation company. No one could have thought that 5-6 years ago that we will have that so soon. And yeah, this is why the market's up. This is different to 2000. Remember, 2000, we can compare it, we can compare the euphoria. Market cycles are the same. But in premise, this is different. Why? Well, because they're producing these, and these companies are actually making money. Back in 2000, not that I was actually investing back then, but back in 2000, it's a completely different story. It was companies just putting .com in their name, just creating websites, just going off this whole the whole .com era was very much 90% of the companies weren't making money. There was no money being made. This time round, yes, we're overvalued, but the companies are making money. Let me go back to Martyn's comments. He is with us in the live chat. Did I miss anything? He just said, "Be ready to buy crypto," says Martyn. I hope you're out and waiting. I know it's hard to sit patiently on the sidelines, but that's how you make real money. The markets don't care about anyone's army and buzzwords. There we go. Thank you, Martyn, for your constant analysis and thoughts. If you have just tuned in, my only favour I would love to ask is if you can just hit the like button, subscribe if you haven't done so already as well. That would be amazing. We are now coming up to 1 hour from the event. It's going to get exciting. Back to the NVIDIA story, and then on to our analysis of the Jerome Powell events coming up. So yeah, we heard about Eli Lilly, biggest AI pharmaceutical factory, partnering with NVIDIA, Uber partnering with NVIDIA. So what does this mean for you? NVIDIA is no longer just a chip maker. It's building the foundational infrastructure for AI, telecom, and quantum computing for the next decade. For retail investors, this matters because the company's $500 billion pipeline and long-term government and enterprise partnerships signal multi-year growth potential and recurring revenue. The transition into full Slack systems from AI factories to telecom networks, expanding NVIDIA's total addressable market TAM far beyond GPUs. But execution is key. Watch how fast it can deliver on Blackwell, how Bluefield 4 adoption scales, and whether hyperscalers demand hold up amid global AI build-outs. For long-term holders, NVIDIA is shaping up to be a picks and shovels play across nearly every tech megatrend. The $5 trillion milestone validates NVIDIA's evolution from pure play chip supplier to full stack infrastructure architect. The $1 billion Nokia equity stake and the $500 billion backlog signals multi-year revenue visibility, but watch Blackwell production ramps and Bluefield 4 adoption rates as deployment timelines accelerate through 2026. So essentially, major partnerships, major new products, incredible pipeline, incredible partnerships, but the market's pricing it in. The market has priced this in. If they don't deliver on the Blackwell, if they don't, some of these new products have issues like we've seen in the past, expect a correction. I'm not saying this is similar to 2000. In no way do I think it is. In terms of valuation, I think the companies were overly valued for no reason back then. There are some companies that are certainly overvalued this time round, but they're making money. The similarity is the euphoria, the market cycles, people's sentiment, people's emotions. That always stays the same. People are leveraged up because they love to hear all of this. They are leveraged up more than they can handle. One wick down, they will get deleveraged. We can go into a bear market, and then we can wait for potentially a recession in 2026, maybe due to inflation or something else. But even if we don't have those outside factors, if one thing goes wrong with NVIDIA with Blackwell chips, you get that initial sell-off. You'll get investors panic and sell because they don't want to be part of a bigger crash. Then you'll get the liquidation wicks, and then that's when you have a 20-30% correction. So always be prepared for that, plan for that. Don't be like the others that just at this point are leveraging up just to get a bit more out of it, because all of these headlines are amazing. These headlines are amazing. It makes us more confident in what we invest in. It makes us more excited for the future. But it's that leverage. It's those people that are too excited about this, that are maybe late to the game and buying now, but they're buying with leverage to overcompensate. They will get wiped out, and then it will lead to bigger institutions getting wiped out, because once liquidation starts spiraling, everything starts falling. That's the story there about Nvidia. We'll come back onto the South Korea trade deal as well. We'll come on to the US shutdown going into week 5. We'll talk about the XRP ETF. Let me mute that. Let's see if we can get 106,000 subscribers today. So if you haven't subscribed yet, no one subscribed since I last said it. What's going on? It takes 1 second. I'm going to wait and we'll continue with the analysis as soon as we get to 105,800 subscribers. There's 990 people watching. There's got to be 40, 60 of you that haven't subscribed. Let's see if we can change that. Take 1 second, subscribe, hit the notification bell, get your friends to subscribe, get your partners to subscribe. Let's see if we can get this to 106,000 subscribers. Let's see what you guys can do. If you do appreciate the live coverage, we're going to bring you Jerome Powell's rate decision. We're going to bring you the FOMC meeting. We're going to bring you the Q&A. We're going to give you the rest of the analysis before it happens. We're going to give you a flash sale in 1 hour. We're going to give you the post analysis. We're going to give you the earnings. We're going to give it all to you live. We're not like other channels. Remember, other channels want you to sign up for leverage trading so that they make money, full well knowing that 95% of you will lose money. I don't want to promote leverage trading to anyone. We don't want to. They will promote corrupt exchanges like FTX. You all saw what happened with that. They'll want to promote random cryptocurrencies that they know nothing about because they see that $30,000 check. Well, Martyn sees them and he deletes them. He does not engage with them. If you haven't subscribed yet, it'll be great to have you part of this family. Let's see if we can get you. Let's see if we can get this channel up to 106,000 subscribers. I'll check back on this. Let's see if we can get another 28 to get to 105,600. Let's see if we can do that now. Thank you very much. I'll check back on that in a second. Let's go back to our main analysis. For everyone new who's just joined in, I'll give you a quick recap of what we've already covered. So, from our very own newsletter, first link in the description. If you haven't got the newsletter yet, here is the link. There is a free trial. You can sign up to it, but in about an hour, I'm going to give you the best deal ever. You can still obviously subscribe and then get it as well. Let me tell you what this is all about. So, again, we started by saying it's going to be a 25 basis point cut. We are very confident in that. I am very confident in that. The market is priced in a 25 basis point cut. So forget about, is it going to be 50 basis points, it's going to be a hike, it's going to be a pause. It's going to be 25 basis points. And if it's not, well, it's very easy to tell. If it's going to be a hold, the market's going to crash. If it's going to be 50 basis points, the market's going to rally. We'll get that decision soon, in about an hour's time. Then half an hour later, that's what's important. Half an hour later, we're going to get Chairman Jerome Powell giving that press conference. Excuse me. So investors will have to look beyond the action to the words spoken by Chairman Powell. Talks about expectations, wildcards. We expect... what do we expect? Yeah, we expect a 25 basis point cut. We expect... another rate cut in December. We expect a few rate cuts in 2026. We expect Jerome Powell to talk about that. What's not expected is what is in disagreement is what's happening in 2026. Look at all analysts. Look even inside the Fed. No one knows how many more rate cuts there should be in 2026. Some people say 5 rate cuts. Did we just get 5 bronze memberships given away by Josh Monroe? If you want to claim this, make sure you hit the like button. Make sure you are subscribed. Josh Monroe, thank you so much for giving away 5 memberships. This is incredible.
The year is 1991.
Oh, there is the music. We'll play it if we get a few more memberships getting gifted. We'll get the Phoenix song playing. Thank you. Please do thank Josh Monroe for your membership if you get if you've received a membership. This is what happens when you subscribe. Potential free memberships. Yes, Josh Monroe, I love it. Thank you very much. Heard it there from Josh Monroe. Have we hit 105,600? I am not sure. If you haven't, let me put that there. If you haven't subscribed yet, let's see if we can get 20 more subscribers, and then you get that chance of winning memberships. The rate decision. Yeah, the rate decision doesn't. Someone just said the rate decision doesn't matter. Yeah, essentially, obviously it matters, but we know what it is. It's 25 basis points. If it's lower, it's going to crash. If it's higher, 50 basis points, it's going to rally. What we want to hear about is the future. The market is forward thinking. Look at that timer, just gone less than an hour. So it's going to get Sensei play Phoenix. If we get, I don't know, the Phoenix is left for special occasions now. We'll have to get everyone giving away memberships, or we have to get a really big super chat, and then we'll play Phoenix, or we'll have to get XRP at all-time highs or something like that. Phoenix is for special occasions now. We love Phoenix here on the show. It's I'll give you a glimpse of it. Oh, I've turned off sound effects. 1 second. Look at this.
And people are living together.
Wait, here we go. One glimpse of Phoenix.
The year is 1991.
Oh, I know everyone wants me to play Phoenix. Not yet. So yeah. I turn off the sound every time that song is played. Oh, okay. Only Cedar Trees doesn't like it. Okay, so the market is priced in approximately 3 cuts for 2025. We're expecting another rate cut in December. We need to hear about the future. We need to hear about what we haven't priced in for. That's what Jerome Powell is going to tell us. And the big other factor is quantitative tightening. If we get the announcement that's going to end today from Jerome Powell, that's the equivalent of getting a 50 basis point rate cut. The markets will rally on that news because that will be good to hear that quantitative tightening is ending. If we get reports that Jerome Powell says it won't end for a while, that could send the markets down. So we really want to, we're priced for perfection. We need to get perfection. So we kind of want to hear that rhetoric from Jerome Powell that quantitative tightening is coming to an end, and it's ending. Oh, Comic is just giving away 5 memberships. If we get one more person give away 5 bronze memberships, we'll get Phoenix playing. We will have to get Phoenix playing to get to lock in that. Make sure you've hit the like button, subscribe. Thank you so much to Comic KOS for your 5 memberships. If someone else does 5 memberships, we'll get Phoenix playing. Here we go. Thank you so much. One more and we'll get Phoenix playing. One more person. Or if everyone just gives away 1 membership. If all the members or anyone who's watching just starts giving away 1 membership and we get it rolling in the chat, we will do the Phoenix song. I love it. We've got someone being weird in the chat. Yeah, to claim them, make sure you're subscribed. Have we hit 105,800? Not yet. Not yet. We'll come back to that. Let's continue with the analysis for a second. Okay, where were we? We're here. So yeah, QT will be great to hear. If he pushes it down the line, that would be great to hear. It's all about what Jerome Powell says. So we'll see what he says about quantitative tightening, easing. Then we'll see what he says about what his tone is going to be, because this is what everyone is going to be listening for. So we haven't covered this yet, so let's go through Powell's language blueprint, the dovish versus hawkish tells. The post-market 2:30 p.m. Eastern Time reaction will be defined by Powell's linguistic nuance. Seasoned investors watch for specific vocabulary that signals the path ahead. I want you guys to be seasoned investors. I'm sure you are. But let me give you a recap of what to look for. It's not about that rate cut. It's not about that initial decision we will see first. It's about what's said, especially in a speech and the Q&A. So, dovish keywords. It needs to signal stimulus and cuts ahead. That's what we want him to hear, or what we want to hear. We want to hear him talk about more rate cuts. We want to hear him about giving guidance. We want to hear him talk about sort of injecting money into the system. That's what we want to look for. And those phrases will be like insurance cut, risk management. That will imply preemptive easing. That's from JP Morgan. And accommodative stance. The most powerful dovish phrases remains reference to liquidity conditions tightening or describing current policies as inappropriate given current market conditions. If you start saying quantitative isn't inappropriate anymore, that will be great, because that means, what does that mean? Well, that means that's ending. If he says we are now amongst a easing cycle, that will be great, because that will signal more rate cuts. If he starts talking about more rate cuts in 2026, gives us further guidance, that would be great. Anything that sort of suggests more rate cuts, whether that is inflation is under control and we don't need to worry about inflation, that brings the idea of rate cuts into more rate cuts will be great. So any language like that, and I'll pick up on that language and I'll tell you straight away in the chat, and we'll have the full analysis after. So that's why you should watch it here rather than just watching the conference, because we'll have the full analysis. So some funny comments. We'll go into the comments in a second. Yeah, if you want if someone else, if everyone starts doing one membership given away, or if someone does another 5 memberships gifted, or does a big super chat, we will get the song playing. Oh, you heard it here first. Look at this. Look at this. I'm gonna hold Martyn to this, by the way, guys. Look. Look at this. I'll first show you the subscribers and then look at what Martyn just said. We're 105,790 subscribers. Thank you, everyone, for doing that. Let's see if we can get to 800. Martyn just said, Sensei gets a bonus if he hits 107,000 subscribers today. Why not? I'm on holiday and in a great mood watching the show. Lol. This is good. I love it. Okay, we've got a target now. 107,000 subscribers, guys. I need the bonus. Help me out. Get on all your accounts. Subscribe to Martyn Lucas Investor. Let's see if we can get up to 107,000 subscribers today. Let's see if I can get a bonus. If I get a bonus, I'll see if I can give back to you guys. Let's see if we can do it. Kind of discussion. Can we get a discussion about the near 40 trillion with a national debt in America? That's always, I mean, we can talk about that for hours. Probably not appropriate to talk about it today. But yeah, always at the back of your mind, isn't it? That's why there's crypto out there. That's why you diversify asset classes. That's why you have gold and silver. You want to mitigate for that risk, because at some point you can't just kick that can down the road. Let's see, 3 more subscribers to get to 105,800. Get this man a bonus, says Seth Houston. Thank you very much. Yeah, I deserve a bonus, don't I, guys? If Martyn doesn't give me a bonus, we're just gonna the first show Martyn comes back, we're all gonna protest. But we can do it. I'm sure we can do it. 107,000 subscribers. Okay, so 2 more people. Can we get it? 105,800. Let's see. We'll come back to that. So yeah, this is the most important part. What is it going to be, dovish or hawkish? I've explained to you what dovish would look like. So yeah, what else is there? The most powerful, liquidity conditions are tightening, inappropriate given current conditions. A dovish surprise means a sharp rally for both growth and tech stocks. So remember, dovish would mean risk on will rally. That's crypto, that's stocks. Growth and tech will rally. A fall in treasury yields, 10-year yields could drop 20 to 30 basis points. That's from UBS. Weakness in the dollar index, that's given if remember, the dollar will weaken if we get rate cuts, and dovish behavior from Jerome Powell, and strong rallies in crypto and gold. So gold will rally, crypto will rally, growth stocks will rally, AI will rally, Nvidia will rally. That's what we expect if we get dovish thoughts. If Jerome Powell's in a good mood today, that's what we get. This is the concerning part, the hawkish stance, because remember, the market is waiting for any little reason to sell off. We've seen it with the regional banking crisis, which was a nothing burger. We saw it with the 100% tariffs, which shouldn't have caused an 85% crash on XRP. The market's waiting for anything so it deleverages or that it crashes, because the market will sell and then ask questions later. How will that happen? Well, that will happen if Jerome Powell says stuff like this. If he's hawkish, basically signaling inflation fights takes priority. Remember, the Fed has a dual mandate: control inflation, control the economy and the jobs market. How do they control inflation? Well, they keep the interest rates at restrictive levels. They keep interest rates high. If inflation's going up, they increase interest rates to fight inflation. If the jobs market looks concerning, then they bring inflation down. That would be sort of that's the dual mandate. If they start being more concerned about inflation, then they might say that they will keep interest rates where they are. The good news is on Friday last week, we covered CPI live with all of you, so thank you for tuning into that event. That was a massive event because it was so important, and inflation was below consensus. So I don't think inflation is going to be an issue for Jerome Powell. So I don't think he's going to be talking about inflation being persistent. If he does mention it, then obviously that's not good. If he mentions it, he might mention it's sticky, or he'll probably say it's still above target, depending on how much he talks about inflation. And remember, he looks forward at inflation, not just what we got, but potentially what it's forecasted to be. If he starts signaling inflation is a problem, that will cause the markets to certainly sell off, but I don't think he will. I don't think that will be the main concern. If he warns about premature easing, this is something he can warn about. He can say, well, we don't want to just keep cutting rates. We're not just going to go rate cut after rate cut after rate cut after rate cut. If he says language like that, the markets won't like that, because the markets want to hear we're going to have a rate cut in December. They want to hear that we're going to have a rate cut in January or February, when the next one is. They want to hear that there's quite a few rate cuts in store for 2026. If he doesn't give off that sort of rhetoric, then that's when we're in trouble. That's when we can start expecting the markets to go down. So if he starts warning about premature easing, that's hawkish. If Powell states that restrictive policy remains appropriate, again, hawkish. It just suggests that the Fed is uncomfortable with the current easing pace. If they say stuff about the current pace, about we've had a rate cut last time, we're going to have one this time, we might have one next time, but we don't want to keep having rate cut after rate cut, then the market might not like that. This would lead to a sell-off in tech and a rise in real yields, mirroring the aggressive tightening cycle in March 2022. This could be the start. If he actually says all those things, which I don't think he will say, that could be where the markets start crashing. So let's talk about the restrictive rate, because this is the thing that everyone disagrees on. And remember, I'll explain to you what that means, and also the debt wall. So let's talk about both these things. Let me go to your comments as well. Celebrating 100,000 Lucasades. Congratulations to anyone who managed to get that mug in the last one. That's a collector's item now. Cedar trees, yeah, we covered that about 3 weeks. What was it? Last week? It was last week. We covered the news about the 85% of S&P 500 companies beating on earnings, and we basically said, well, if they weren't, the market would be crashing. The market's priced for perfection at this point. Yeah, we've covered that story last week. If you want to check it out, it's on the newsletter from, I think, Friday or Thursday last week. Potato Family says, Sensei, I think it's time for a pee break and a cup of tea. Shall we take a break? I don't know. Time for a break? I don't think so. Let's keep it running all the way until 8 p.m. That's another 4 hours. Is it 4? No, 6, 7, 8. Oh yeah, we'll probably be live for another 3.5 hours to give you all the analysis after. The event starts in 47 minutes, so we might. Potato Family, keep me on in the background and go for your toilet and cup of tea. I'll be here when you come back. BYND talk will get you more subs. Try it. BYND, is everyone still talking about BYND? Everyone's going to stop talking about it in like a week. Is that still being talked about? Little short squeeze. Everyone's probably losing because they're leveraged short and long. BYND. What's Beyond Meat doing? Down 6% today. Yeah, I mean, oh my God, it's crashed, hasn't it? Yeah, I mean, we said $6. Take it all. Take it all, we said, at $6. It's, oh my God, that's a horrific crash over the last few days. We looked at it at $6 and I said, take it all. It's crashed 70% since. Yeah. Not to say it's not going to go back up. I mean, it's filling a gap, so maybe it'll bounce at 155. There's also another gap at 75 cents, but there could be some buying pressure around these levels. But yeah, I mean, it's already crashed 70%. So congratulations if you managed to get out that position. Let's go back to Bloomberg.
Now we'll welcome our global television audience to the conversation.
Let me see if we can bring it up over here.
Of London says Bill de Blasio is not on board, questioning the economic plans of the Democratic frontrunner. Did you see this interview? The apology has been issued. De Blasio says he was astounded. Yes, a complete fabrication. The Times of London never spoke to Bill de Blasio. I'm not sure exactly why they would have spoken with Bill de Blasio. So once you get over that bit of randomness and find out that this actually was a complete farce, the Times has apologized and removed the article immediately after discovering that our reporter, this is the statement, had been misled by an individual falsely claiming to be the former New York mayor, the British newspaper with egg on its face. These are the kind of stories that really make us wonder. We want to make sure that this really is Jeannie Shanzano. And of course, Ashley Davis. I'm pretty sure she's with me here in studio. As we assemble our panel, Jeannie Shanzano, Bloomberg Politics contributor, our Democratic analyst.
Wow, Bloomberg's really weird today, isn't it? I don't know what they're talking about, random stuff. Uh, what's going on? Let's have a look. Yeah, they haven't started their coverage yet. That's probably why. Yeah, we'll stay on this. Anyway, let's get back onto the markets. Let's have a quick look at the markets as well. This is XRP. Oh, we always like to hear Trump speak. Let's hear this.
We'll see what happens.
Trump says you're trolling when you talk about a third term.
Well, I don't think he said that. I don't think he'd use that term. But it's a very interesting thing. I have the best numbers for any president in many years, any president. And I would say that if you read it, it's pretty clear. I'm not allowed to run. It's too bad.
All right. If you didn't hear that over the he was in the plane talking to reporters in the back of the plane. It's pretty clear I'm not allowed to run. It's too bad. The speaker knew about this. Mike John.
I'm not enjoying the Bloomberg coverage today. It's normally better in the morning. Let's go back to, let's get rid of that for a second. Let's have a quick look at the markets. XRP is now rallying a little bit over the last half an hour, which is nice to see. It will be interesting to see how XRP reacts throughout this. I'm going to ask the question, if you are part of the XRP army, let me end this poll. We all know it's going to be 25 basis points. Let's do a poll. Let's start a poll. Are you part of the XRP army? Yes. No. Answer the question. It's in the chat. Are you part of the XRP army? Yes or no? I'm going to answer yes because I'm in the XRP army. I'm the leader of the XRP army. No, I'm kidding. Yeah, let me know in the poll. 2.3 thousand votes in our last poll, and that poll was all about the decision. 25 basis point cut was the majority. 57% of you said that there'll be a 25 basis point rate cut. That's what I think is going to happen. Very confident in that. If I'm wrong, well, the market's also not going to be expecting that. 50 basis point cuts, so 20% of you. So 20% of you are prepared for a big rally. I don't think that's going to happen. I don't think we will get, I think it's actually more likely we'll get hold than we get a 50 basis point cut. If we do get a 50 basis point cut, that's going to be a massive surprise, and that'll be a rally that will start there. If we get a hold, 19% of you say that would be a market correction you're looking for. If we get a hike, 4% of you say that. Maybe you misclicked. That would be a crash like we've never seen before. We've got a new poll running. So far, 68% of you are in the XRP army, 31% of you are not in the XRP army. Well, that's very, very interesting. Let's go back to, well, we were just looking at XRP. XRP is yeah, up in the last sort of 20-30 minutes, selling off slightly on the 1 minute chart now. All waiting for this rate cut decision. What else do we have? We've got Bitcoin down 1.5%. Look, ever since we said, look, the market is going to, especially the crypto market, it's not being held up by Nvidia. The crypto market is essentially selling now, because if there is something bad goes on with the interest rate decision, or more likely the press conference, something bad said, then the most risky assets will sell off the most, and that's crypto. So people are basically selling their crypto, waiting to see what Jerome Powell says. If it's good, they'll probably be buying back in a little bit higher, but with more certainty. It's a tactic some people choose to take. I don't choose to take it because I've got a very long-term perspective. But it was expected. We literally said it, and it was breaking. It was up here when we last suggested it, and it's continuing to show that way. So Bitcoin's down 1.5% now. What else do we have? We've got gold selling off, getting ready. Again, we expect gold to rally if everything is dovish, because gold becomes a more worthy investment than something like bonds. And silver's up 2%, trying to find that base. And I'd love to see silver back above $50 so it can find its base there. Let's have a quick look at the general markets as well. What do we have going on? Let's go to this. Where's my stock list gone? Stocks. Here we go. What's our biggest gainers? Joby up 8.23%. We're going to have Vaz live after the FOMC meeting. He'll be doing the Microsoft earnings, I believe. And you can ask him questions about Joby, up 8% today. That's the biggest gainer. Wito is that XRP company. Treasury company up 5% today. Rocket Lab. Let's zoom out a little bit on these charts. What do we have going on? Yeah, Rocket Lab is up, still at $66. Remember, we bought this around $10, $5. Palantir, new partnership with Nvidia, that has just made all-time high stay. Incredible. I wouldn't be buying it because of the valuation, but congratulations and what they do as a company. But congratulations to everyone who's made some money. New all-time high. Vertical Aerospace is trying to find a base. It's up 3% today. Nvidia, $5 trillion, hit all-time high stay of $211. Did you say that if no rate cut, we'll have a sell-off in your opinion? Yeah, for sure. If there's no rate cut, crypto will fall off a cliff. But that's not, I don't think that's going to happen. Nvidia is up 2.61%. Who asked that question? That was a question from David. Songs for Space says Verizon had a nice little pump. Thank you very much. Elon Musk hates himself and he hates us. Why do you hate us, Elon Musk? Sensei, can you please talk a bit on Coca-Cola? Sure. If you become a member, we'll have a look at it. We have to focus on our members. Can someone ban Elon? What's Elon saying? Yeah, can someone get rid of him? I mean, time him out for like 24 hours. Maybe he'll be a bit. Maybe he'll be a bit more happy tomorrow. I don't understand. Everyone is very annoyed about Elon in the chat. Thank you, Mike. Sorted that out. I thought he said. I heard he said God becomes. I thought he said gold. God becomes a more worthy investment, but I realized he said gold. Sorry, Casey. Yep. God's always a great investment. Always invest in your faith. But no, that's not what I meant. I was talking about gold. Stu says, what's your thoughts about Zcash? Don't really have too many thoughts. Rivian up 2.26%. Soundhound AI, we're bullish on, holding $18, going for it for a retest. Enphase Energy, great earnings, bad guidance, coming back to that level of support about $30. Still fairly bullish on this. It's not a large part of my portfolio, but I am bullish on it. Do you ever talk about quantum stocks? Yeah, I mean, if we get requested, we will have a look at it. Seth says, Mike, I've been watching him, not sure exactly what to do. Thank you, Seth. Yeah, look, for all the moderators, if someone says something slightly out of line, you can give them a 5-minute timeout. If they say something fairly bad out of line, then you can time them out for a few hours. If they said something very bad but not horrific, then you can time them out for 24 hours. If they say something very, very very bad, and I'm sure you can see what that is, and then you can just hide them, and we don't want them on the channel. We'll give everyone chances. We respect everyone's free speech, but if it gets really out of hand, and I'm talking like very bad, then you can get rid of them. Sell the news event. If we just got 25 basis points and no press conference, yes, it would be a sell the news because everyone's expecting it. But we're going to get a press conference, and that press conference will move the markets. So we don't know if it's going to be a sell the news event because it's not just a 25 basis point cut. It will be a 25 basis point cut. 30 minutes later, we'll get the press conference. Why is the Fed event at 45 minutes? They release it at 2:30 p.m. Don't they? No, they don't. They release it at I don't know what it is in your time, but they release it. I'll tell you exactly here. 6 p.m. So yeah, they release it in an hour. So not in an hour and a half, in an hour. But we start the event half an hour before. Why? It's okay. I got him. When the ETF drops, we're going to be good. Not necessarily. I mean, I expect a pump if that ETF comes out 10-15%, but it's not just going to pump to the moon. I mean, you saw HBAR, it was up 8%. You saw Solana not really up, Litecoin not really up. It's not all about that. It's about when we get that really bullish sentiment, altcoin season, it allows a lot more people to buy into XRP because it's a spot ETF. They're taking away from the open market. So very much it's great. It's great news, but it doesn't mean if you get an XRP ETF in a bear market, it's not going to move the price of XRP. It's just when you get that good sentiment, that good a nice rally or bullish sentiment, and everyone's buying XRP, it gives them another way to buy XRP, which over time will push XRP's price up. The one caveat to that is if you're in a full-blown bull market, and then you get the news on XRP ETF, because it makes headlines, the retail investor will FOMO, and that's when it'll push up the price, but we're not really at that price yet. What's going on here? Martyn saying, go Sensei. What have I done? Great show, Sensei. Show some love. Spam the chat. Go, Sensei. He's going to be live all day. Yes, I will be live all day. I'm going to give you the full coverage. Yeah, and in about half an hour's time, our full coverage really starts to begin because the Fed event starts, and we'll be going over to our main event. And we also have a surprise for you with a flash sale in 34 minutes as well. So stay tuned. Thank you very much, Martyn. Go, Sensei. Christopher says, on a scale of 1 to 10, how excited are you about the inbound bull run? Very excited. I really hope we get it, but at the same time, I'm not just trading based off emotion. I'm also cautiously optimistic. I mean, we could go into a bear market, and then I'll be more excited for a bear market. In all honesty, I want to be accumulating more crypto. But I mean, I wouldn't complain if we get a bull market then a bear market, because I can sell, buy back in a bear market. So yeah, I think I'll be a bit more excited for a bull market now I think about it. But either way, I'm prepared. Okay, Sensei, it's almost time. You're going to be excited when Powell's speaking. You need to say, man, I need to go. No, potato family, I'm fine. If you keep saying it, I'm going to need the toilet. Go, Sensei. Thank you, MDL. You're always here, but you're always first in the show, but you're still not a member. I can't believe it, but thank you for your support. Bet you ain't heard of Tesla. We actually, I invested in Tesla in 2018. It was one of my sort of what got me into the stock market, really. I was investing in crypto in 2017, 2016. Then my first stock market purchase was Tesla. Then that sort of 10x, 20x, I sold too early. And yeah, that's sort of, there we go. So I have heard of Tesla. Go, Sensei. What is all of this? We need more moderators, in all honesty. There's so much going on. Poor old David Hensley is trying to deal with all of this. Go, Sensei, go, Sensei. Thanks, guys. Go, Sensei. Had Elon just been nicer, he might have received a free membership. Yeah, it's sad, isn't it, Comic? Thank you for your support, though. Thank you, everyone, for saying go, Sensei. I mean, that would keep me going. Any news on XRP? Just got home from work. Can I retire soon? Unfortunately, it's everyone needs to stop thinking about it as a sort of get out of jail free card. It's just another investment that will hopefully do well over time. It's not going to go to $1,000 and retire you overnight. It's part of a balanced portfolio. Are you part of the XRP army? 66% of you say yes. You are talking, Sensei. Go, go, go. Sensei to be Prime Minister or UK of UK. I don't think I'd like to have that role, to be honest. Sensei Crypto, would defensive stock like Walmart sell before the rate cut decision and meeting? I wouldn't be able to predict the future. Dan, KDP started going back up. Got to wait and hope it comes back down. KDP, I remember you requested that a while ago. KDP. It wasn't for me because I wait for really big drops, but it did look okay, didn't it? Oh yeah, 25. I mean, look at that. Look at that analysis. I think you requested. I mean, how are you not in, Seth? I think you requested this and I did the chart. $25 support. We looked at this downwards trend and we said as soon as that breaks the trend, then you're looking for the upside. So yeah, you KDP from the time you requested the analysis, 20%. Congratulations. I mean, I don't know why you're upset about that. It is incredible. Hey, I just realized I own my 6-month badge. David, congratulations for your 6-month badge. What price do you think Bitcoin will hit at the end of 2025? It all depends on basically today. It could go to 150, 160, 170 in a bull scenario. So yeah, that would be my target. Hope that is actually aliens coming. I'm here. Oh, I was talking about that Elon Musk guy. I don't even remember what we were talking about. They use a hello, Sensei. Hello, Stage Your Life. Angie, lovely to see you here. Big event starting in half an hour. You talk about the XRP army. Who's in the Lucasade army? Spam yes or no. Oh, are you guys part of the Lucasade army? Yes or no? Spam it in the chat. Spam it. This is your one chance. Normally, David Hensley will be all over you and banning you. If you're part of the Lucasade army, spam yes. Oh. Here is
and Christopher Tenerife donated €5 through a super chat. Tom Lee predicted a 10k to 12k ETH price before year end. Shall we do a chart? I trust you more. Dollar bills face emoji, playful face emoji, smiley face emoji.
Thank you so much, Christopher, for that. Don't trust me more. I don't trust anyone. Trust yourself. But we can do a chart for Ethereum. We'll do a quick one because we are here for the Jerome Powell event, the FOMC event. But yeah, I mean, essentially, this is just not financial advice, but it's my thoughts. So yeah, Ethereum again. It's hard because it's not really about the chart for Ethereum. It's about, are we going to get that altcoin season? If we do, then 10 to 12,000 wouldn't be like an outrageous suggestion. My thoughts would be, I think I've done it 7,000 something, 7,300. Yeah. So if we get that bull market, I'll expect to break $5,000, which we tried to. We're trying to gain some momentum back. I would be looking at breaking 5,000 and then going on our way to our main target. So the area where I would start selling, and the main target for me will be around $7,400. Now, does that mean 10, 12,000 can't happen? No, my secondary target for Ethereum is around $10,000. So 8 to 12,000, it would be my secondary target, but in a bull market, I'll be taking potentially maybe 50% of my profits at $7,300 for Ethereum. So that can certainly happen, but that's if the bull market continues. If it doesn't, I've got buy orders set up for 2,800, 2,182, and 1,371. So yeah, it's really a double-edged sword where we are in crypto right now. No one knows if the bull market can continue. No one knows if it's going to end. The reason I'm in, because I think the risk reward is greater if I'm in. And then in a bear market, I'll just choose to buy more. I don't really want to be out of the crypto market. There's not enough signals right now for me to be out of the crypto market. That's Ethereum, but thank you so much for the super chat. What if all the crypto ETFs come out at the same time? Do you think we'll have a major run then? I don't think that will have a major effect. I mean, we got 3 yesterday. It doesn't matter if they all come out at the same time or not. It depends what the sentiment is in the market. And right now, there's not a massive euphoric sentiment, at least in the crypto market. Everyone is part of the Lucozade army. MDL is, Joe is. Everyone's spamming it. I love it. Thomas is, Yolanda is, Comic is, Andy is. Yes, forever and always. Seth Houston, thank you. Zach Zay is part of the Lucozade army. Everyone, I love it. The Lucozade army is the best army. It's better than the XRP army. Karen says yes. Now the Phoenix song. We have to wait. We didn't get another 5 memberships gifted. We didn't get a big super chat. We are waiting. Tricks. We'll get it soon, I hope. Josh Monroe says Lucozade Army. Christopher says, haha. Casey says there's a pattern on crypto pulling back. There's a pattern of crypto pulling back leading to FOMC. People are just scale back risk waiting for Fed clarity. Don't worry about the Bitcoin unless there's no cut or worst case a hike. Yes, Casey, spot on. Yeah, there won't be a hike. Can there be no cut? Well, that's a bit more realistic. As in, there's no chance there'll be a hike. I'll put it out there. No chance there'll be a hike. Is there going to be no cut? Well, there's maybe a 1 or 2% chance. Is there going to be a 50 basis point cut? Maybe a 1% chance, but yeah, it's going to be 25 basis points. Let the Phoenix fly, says Comic. Bitcoin nearly 110. I'm bullish on Teo Binster H-Bar and Quant. XRP army. Yes, I don't think I'll ever sell XRP. What purpose does XRP fill? Okay, I mean, do you want to spend hours talking about that? William says, yes. Do you think Jerome Powell will be dovish or bearish around this time? I think he'll be dovish. I think he'll be dovish. Again, what's the point of me predicting something? We have to wait and see. I mean, it's I don't have Jerome Powell's speech in front of me right now. Nonny says yes, good afternoon all. Yeah, everyone make sure you are up to date, so it's always something worth checking. There's a button over here on the broadcast that says live. If it's not highlighted in red, you're not live, so all you can do is press that button, then you're up to date, you're live. So do that, and while you're there, just press the subscribe button, hit the like button as well. Let me bring that down there. 100% true. Thank you, Joe. Okay, let's go back to this. Our event starting in 25 minutes, and our flash sale is starting in 25 minutes as well. Buy your own, then Potato Family. What's Potato Family buying? No, you didn't miss any free memberships. Decentralized versus centralized Bitcoin versus XRP. Great to have you here, Mike, by the way. Stu says decentralized versus centralized Bitcoin versus XRP. No. Both are decentralized. Okay, so is this a good time for a toilet break? I don't think any time is a good time for a toilet break. We're getting very close. We'll wait for Bloomberg to cover the cuts a bit better. They're not doing great coverage at the moment.
For TV and radio, our listeners should know, and we discussed this, J.D. Vance made a...
Talking about food stamps now. It's not really market related. I don't know what they're talking about today. Let me check this. We're checking all our sources. We're going to come back to the analysis and get ready for the Fed decision. No, that's fine. Okay. It's only $3 for membership. Yes, it is. The membership is $3. You can get the Electrum membership. It's our newest, best membership. It's the greatest group of people on a Sunday evening where we do the trivia. We talk about the past events. We do chart requests. It's a great event. If you want to upgrade to Electrum, that is one of the main perks. You also get the perks of bronze and silver. Okay, let's come on to our main analysis before the Fed event starts. We go over it one more time before the last, before we get the decision and then the FOMC conference. If you have just tuned in, if you haven't hit the like button yet, please do that. It takes 1 second. Also, oh, no one's hit the like button. Why are we? Let me refresh this. We've got 900 people watching and only how many? I just need to read 438 for what is going on. Please do hit the like button. It takes a second. And then the next thing you need to do is subscribe. We're trying to get to 107,000 subscribers today. If we do, I get a bonus. We just hit 105,800. Thank you very much. Let's get up to 900. Then let's get up to 106,000. And then it's smash through 107,000 subscribers. That would be incredible. You can help by smashing the like button, subscribing. And if you are wanting to do something extra, you can come over here and press the like button here as well. No one's doing it right now. If you come over here and smash the like button here, you can smash it a million times. You can hit any of these emojis and I'll be watching it come through as well. So do consider going into live chat and doing that. Trick says hit that like button. Thank you so much. Fed cut in 25 minutes, says Zach. It'll be a little bit longer than that, but yes, we will go over to our main event. Okay, so here we go. Let me go back over here and talk about the next analysis point, the restrictive rate conundrum at the debt wall. So this is the talk of the town. What is that restrictive rate? What should interest rates come down to? Should they come down to 0, 1%, 2%? No, they're not going to come down to there. The restrictive rate is somewhere around 3%, but it depends what people say. Some people say it's 3.75%, which would just be one more cut, or where we go after today. Some people say it's 3%. Some people say it's 2.5%. Well, that is the big question. And Jerome Powell will hint at that today as well. So the current easing cycle is fundamentally about moving policy from restrictive to neutral. They want to go to a neutral rate, going from restrictive to neutral. What is that neutral rate? The current rate, 4% to 4.25% pre-cut, that's the current rate, is above the estimated neutral rate of around 3 to 3.7%. That's what the Cleveland Fed is saying. There's something called the neutral rate. The restrictive rate is where we're at now, keeping everything restrictive. The neutral rate is where everything's in balance. Inflation's under control, the economy's good, and they need to find that neutral rate. What is that neutral rate? Well, the Cleveland Fed is saying it's between 3% and 3.7%. That's quite a range. That's about three rate cuts of a range. So the Cleveland Fed estimates that a 77% probability that policy is currently restrictive. Explaining why the labor market is slowing. That's why, the labor market's slowing is because we are restrictive. That's the clear giveaway that it's restrictive. Markets are, let me just check on that. We're all good. Markets are betting that continued weakness will force the Fed to cut. Where were we? The Cleveland Fed estimates a 77% probability that policy is currently restrictive, explaining why labor market is slowing. Markets are betting that continued weakness will force the Fed to cut below neutral by 2026, creating a late cycle accommodative environment. The easing is critical given the underlying debt debt fragility. Consumer stress. Credit card balances are back at the 2023 peak of 1.21 trillion. There is fragility in the debt. 1.21 trillion of credit card debt. That's, I mean, it's all-time highs. The 30-day delinquency rate sits at an elevated 3%. More critically, the re-reporting of the federal student loans show that 10% of that debt is now 90 days delinquent. This previously hidden stress makes the consumer soft landing scenario highly precarious if employment falters. And that's what we're talking about. We are expecting a soft landing. The market's priced in a soft landing. If there is this consumer stress, then what we're looking at actually is, oh, look at this.
The year is 1991.
Smash the like button, subscribe, claim your free gifts, thank Nonny. If anyone else wants to give away memberships, you can do it now. This is Phoenix. Smash the like button, subscribe, get ready for the big event. Here we go. Go, Phoenix. Like a phoenix, you burst in a fire, burn, a thirst and desire. You transform right up in a flash. You spread your wings to rise from the ashes. Phoenix, you burst in a fire, burn, a thirst and desire. You transform right up in a flash. You spread your wings to rise. Thank you very much, Nonny, for the 5 memberships. Here we go. Get ready for the event. 20 minutes, we get started.
Get ready for verse 2, Electric Boogaloo.
You see the truth behind the veil, and you know that they're just looking.
Everyone, let's pump up the likes. We're on 500. We're on 506. Let's get it up to 600. Can we do it? Smash the like button. Why is no one hitting the like button? What's going on? The subscribers as well. Let's see if we can get up to 105,900. Let's do it. Likes, 105,900 subscribers. Can we do it? Let's do it.
Phoenix, you burst in a fire, burn, a thirst and desire. You transform right up in a flash. You spread your wings to rise from the ashes. Phoenix, you burst in a fire, burn, a thirst and desire. You transform right up in a flash. You spread your wings to rise from the ashes.
4 more likes and we get to 550. If you haven't subscribed yet, get your friends and family involved. Thank you again to Nonny. There is that Phoenix song everyone was waiting for. Thank you again for everyone who donated those memberships. Please do thank Noni. If you have won a membership, you can always get a membership yourself as well, and you should be renewing these memberships as well. There is the link to become a member. We are 15 minutes away from our flash sale, from our Fed event. We're going to move over to the next show. We're going to get ready, and it's going to get very fun. What's your take on Bitcoin maximalists? I don't like them. That's my take. Okay, so yeah, the restrictive rate conundrum. Credit card balances are high. Student loan delinquency is high. This previously hidden stress makes the consumer soft landing scenario highly precarious if employment falters. The corporate debt wall, a massive 2.4 trillion corporate bonds mature between 2025 and 2027. Companies that finance near zero interest rates in 2020 and 2021 face a maturity wall of refinancing at higher rates. If the rate stays sticky and credit spread widens, over-leveraged firms, especially the 20% of speculative grade debt, faces a crisis that could trigger a 2026 credit event and recession. There's many factors, in my opinion, that could lead us to a bear market in 2026. I think the euphoria will continue. I think we'll get that altcoin season. When it comes to 2026, there's issues like this, such as all of these people that got 0% interest rates in 2020 that are going to need to refinance. It's going to be the credit card debt, it's going to be the US debt, it's going to be the labor market, is going to be an uptick in inflation. It could be any of those things that send us into a bear market. I don't think it's going to be that fairy tale story of a perfectly soft landing and a perfect stock market over the next 5 years. I don't think that's going to be the case. We've also got Q4 earnings. We're going to be covering Microsoft tonight. And again, earnings is very important because that's what matters, is how much money these companies are making and are they meeting expectations. And not only meeting expectations, they're priced for right now they're priced for perfection. So that means they need to beat on earnings to quite a large degree. Q4 earnings, analyst targets, and AI valuation. The current market is defined by resilient earnings, high valuations, and the AI-driven divergence. The S&P 500 earnings growth for Q3 of 2025 is trending at a robust rate, continuing a streak of double-digit earnings growth. The growth is highly concentrated in the information technology sector, emphasizing the market's dependence on the AI boom. AI valuation versus .com. It's quite interesting to look at them both side by side. The AI-driven rally is stretched. CAP-E ratio is 36x. 36x, which is quite close to the 2000 peak of 44x, but it is not a .com bubble. Today's mega cap tech is overwhelmingly profitable, and Nvidia's forward P is 30x. So you're looking at this, and it's different. As I mentioned earlier, this is not 2000. It is in the sense of the hype, but in the sense of the companies themselves, they're actually making money. So you've got here companies actually making money. The majority of these AI companies are making money. Maybe they're overvalued, but they are making money, which is very different to 2000. Today's mega cap tech is overwhelmingly profitable, unlike loss-making firms of 2000. However, 80% of analysts surveyed by CNBC believe that AI stocks are significantly or somewhat overvalued, and I agree with those 80% of analysts. Analyst targets. Let's have a look at some of the analyst targets. Strategists largely expect the rally to moderate. The median 2026 target of 7,200 to 7,700 implies only a modest 5 to 8% upside over the 18 months, suggesting consolidation is expected after a strong 2024-2025 rally. The cautious outlook suggests contrasts UBS maintaining a high 93% probability of a recession. That's UBS coming out and saying they expect a recession. That's also major analysts saying we only expect another 5 to 8% upside. That is the upside presenting by analysts. That means, are we going to go sideways or are we going to crash? If we go sideways, well, there's going to be times within that sideways moving action that will have 5% dips to buy in. The other option is we crash. Come down 10, 20, 30%. And that's what I want to get ready for once the euphoria is over. UBS is saying they think that there's a recession is going to happen. Remember, a recession is the best time to make money. Awful things happen to the world, but if you're a stock market investor, there's no better time to invest than in a recession, because those are when you get everything on major sale. So you do want to be prepared for that scenario. So yeah, 93% probability of recession, more accurately stagnation, while forecasting a soft landing. Yeah, so this contraction highlights the tightrope walk. Growth is slowing, but the consensus expects the Fed to cut just enough for a soft landing. Historically, it only occurs 2 out of 3 of 11 cut cycles to avert hard landing. Most of the time you do have a soft landing, but there's a 1 in 3% chance, 1 in 3, there's a 33% chance that you don't get that soft landing. Are we going to get that soft landing this time? Well, the market is pricing in a soft landing. That's what the market's pricing in. But if we don't get a soft landing, then we can crash. There's a 33% chance of that. If we get everyone refinancing their debt in 2026, the market can crash. If we get all of these companies not continually outperform, they have to outperform and outperform and outperform all throughout 2026 to justify these valuations, then we can get a crash. So you have to be prepared for that. I do think a crash will come. I just think we'll have euphoria before it. Global feedback loops, tariffs, and DXY. Global trade policy remains a critical wildcard that can derail the consensus easing narrative. Tariff escalation. The average US tariff rose to 27% in June of 2025, the highest overall in over a century. Crucially, 61 to 80% of these tariff costs have been passed through the US consumer, hitting goods like electronics and clothing. The good news about that is you think it's a one-time hit rather than a big inflationary pressure. That's why the Fed is sort of ignoring it. Inflation risk. If tariffs persist, core goods prices could remain 2% plus above trend through 2026. If tariffs drive Q1 of 2026, CPI back to 3.5 plus, Powell may have to signal a pause in rate cuts, which could trigger a stock market sell-off by repricing terminal rate higher. So he might talk about this today. Are the tariffs going to have an effect in 2026? If they do, then why would he cut rates any further? He needs to keep them restrictive. The DXY weakness, the US dollar index, DXY, currently is at 98.93 at the moment, and it has a downwards bias due to the Fed's rate cuts. Easing is dollar negative. Remember, if you're cutting rates, you expect the dollar index to go down. Let me just open this for 1 second. What's going on here? Actually, let me go back over here. Let's go over up here.
Advancing a renewed tech rally, sending the S&P 500 index up for a fifth straight day. S&P right now at 6906, up 15. That is a gain there of 0.2%. A lot of green today with the Dow up 200 points, up 0.4%. The NASDAQ Composite Index up 124, up 0.5. The NASDAQ 100 Index up 0.3%. The Russell 2000 Index up 0.6%. And the Mag 7 Index ahead of earnings coming up after the bell from Alphabet, Meta, and Microsoft. That index up now by...
I'll have to pause that there. Let me just do this. We'll come back to Bloomberg in a second as well. The Fed event is starting in 5 minutes. We're going to start getting ready for that as well. Okay, so let's finish off the final part of this analysis. Dollars goes down when rates come down. That's good for the stock market, however. So, dollar weakness typically boosts commodity prices like oil and helps emerging markets, but also adds to the important inflation pressures, further constraining the Fed's ability to cut aggressively. So here is the final part. The final euphoric phase, the 2026 peak risk. Historical precedents show that when the Fed begins a rate-cutting cycle, it often triggers a final euphoric rally 12 to 18 months before the eventual peak and crash. In 1998, cuts preceding the March 2000 peak, and in 2019, cuts preceding the Q1 2020 peak. The current cycle, beginning in September of 2024, aligns perfectly with a potential climax around June to August of 2026. The final euphoric phase is already signaled by classic indicators: spiking margin debt not seen since 1998, high retail FOMO, surging meme stocks, and VIX remaining suppressed despite stretched valuation. The key risks are small caps benefiting directly from QT ending. Crypto, Bitcoin, and altcoins are pure liquidity plays. The QT end is deeply bullish for crypto. Altcoins will enter a high beta season when Jerome Powell confirms QT is ending and signals a clear path for further cuts. So there's a massive argument to be made that after today there could be a significant pump, especially about QT. We're going to be listening to QT. The danger is that when the final euphoric surge peaks in Q2, Q3 of 2026, that could be when the recession comes in. It can be at the beginning, it can be at the end. If you're using this specific metric about how far after the cutting cycle do we peak, while you're looking at Q3 of 2026. This reversal will be violent, triggered by earnings disappointment, credit events, the debt wall finally breaks, or tariff escalations, leading to massive margin calls and cascading corrections. So understand that there is a crash on the table. There certainly is. But it doesn't have to be today. Final investment mandates. Tonight's 25 basis point rate cut is irrelevant. It is. The directional move for the next quarter resets on clarity regarding two keywords from Powell, QT and the 2026 rate cut path. Dovish surprise. What I'm going to actually do is take a quick toilet break, but I'll put Bloom. What should I put on in the background? I'll be back in literally 20 seconds, but I want to get ready for the Fed event. So let me put on this. Here we go. Let me unmute it over here.
Time tonight. And yes, the stakes are very high following his time in South Korea, in which another framework trade agreement was codified into an actual trade deal. Joining us from South Korea right now, she's in fact in Jeongju, where President Trump is going to be meeting tomorrow with President Xi. Tyler Kendall, Bloomberg's Washington correspondent, joins us now from the other side of the world ahead of this meeting. Tyler, I believe it's about 2 o'clock in the morning where you are. What kind of preparations are going into this meeting tomorrow, and what will be the venue?
Yeah, hey, Joe. So we have confirmation on the city. It's going to be in Busan, about an hour north from where I currently am. There's speculation on the venue right now. We can't publicly confirm it, but we are expecting this.
Okay, I'll be back in 1 minute, and then we'll get onto the Fed event.
We'll see if press gets invited in or if President Trump gives any sort of remarks afterward. That's something that we're keenly watching for. As you well know, at the White House, these bilateral meetings often open up. But considering just how high the stakes are, we're waiting to see if that's the case here, too. Now, you laid it out before. There's really just so much on the table right now that we just don't know when it comes to what these two leaders are actually going to agree to. But what has been clear is that there's been a simmering of tensions in recent days. But I have to say, from following President Trump these last few days here in Asia, it really does feel like the White House is trying to gain as much leverage as possible, no matter going in to this high-stakes meeting with Chinese President Xi Jinping. Look at the agreements signed in Tokyo yesterday on critical minerals, on shipbuildings, these pledged investments in these areas that the U.S. has deemed absolutely essential when it comes to countering China. And then today, as you mentioned, inking this long-awaited trade deal with South Korea. Now, Joe, this was highly anticipated. The president had telegraphed earlier that this was going to happen this week, but it came after a lot of months of negotiating, some last-minute negotiating and pomp and circumstance here on the ground in South Korea. But we can officially say that they now have that 15% tariff in place, and that also extends to autos. That is absolutely critical, as you well know, so that South Korea's market can compete with their neighbor Japan's market, which brings us back to kind of closes the loop on this whole trip, because they want to stay competitive in this region, particularly when it comes to car making and autos.
Well, we're lucky to have you there, Tyler. Of course, Tyler will have much more coverage for us throughout the course of this meeting that, again, will start 10 p.m. Eastern Time, 10 p.m. tonight. It'll be already Thursday in South Korea. After the meeting with the South Korean president, President Lee gave President Trump a crown. Did you see that? The crown that symbolizes the divine connection, they said, between the authority of the heavens, sovereign.
Okay, let's pause that. We are getting ready for the main event. In 1 minute's time, we're going to be switching over to our next show. Our next show is the one where the Fed event, this is our Fed event show, where we're going to get the interest rate, and then we're going to get the press conference, and you're also going to get the flash sale as well. So we're going to move over to our next show. I'm going to give you the link. It's directly on this channel, so you don't go anywhere. It will also automatically take you there, so you don't really have to do anything. But for the people that want to click on the link, I'm going to give you that link now. That's the show we're going on to next. That's our main show. So that is live now. Going to give you that link right away, and then we're going to go over to our main Fed show. So this is going to start getting exciting. It's going to start heating up, but it's all going to happen on our next main event, which is literally, I'll be live in a minute from now on that event. So literally go to it, and I'll be there waiting for you. So I'll put this link in the chat. You can click on that link. It'll take you directly there. I'll pin it in the chat, or if you stay where you are, YouTube will automatically redirect you directly there. So there's two ways of doing it. Let me pin that over there. So you're not going to miss anything. We've got it all prepared for you. I'm going to do that. Okay, so yeah, go over there, hit the like button on your way in. We're going to start right now. The event is starting now. Essentially, over there, we're going to give you the full analysis, what's going to happen. We're going to cover the rate cut. We're going to cover all the news. We're going to cover the press conference. We're going to give you the analysis after. So it's all starting now. So if you watched all the way through here, then go to that event right now. The announcement will happen straight away. So I'll give you that link. I'm going to spam it in the chat. I'm going to end this show, and I'll be starting that one in 20 seconds. I want everyone to go over there, and I'll be with you in 30 seconds. So until next time, take care of yourselves and each other. The next event's starting now. Everyone go over there, same channel. The link is in the chat. It will automatically take you there. Bye-bye.